Hello. Good morning, everyone.
Good morning, sir.
Salam alaikum. Ekaro, Dalo. So, how was your night, everyone?
Good morning, sir.
Good morning.
Good morning,
I
sir.
greet you especially, sir.
Good morning, sir.
So we have 4 minutes remaining for us to start for today's lecture. Please, can somebody pray for us, a Muslim brother or a Christian brother? So can somebody pray for us, a volunteer, Muslim or Christian?
We work this time.
Okay, I will, sir.
That chat.
All praises.
Who is saying the prayers, please?
Good morning, all.
Good morning, everyone.
Good morning.
Let's pray. My name is Tanko. In Jesus' name.
Amen.
Father, we bless you for a day like this, for the gift and bread of life. For us to witness another day in our life is not by power or by might, but by your spirit and doing. Today is another day that we are going to attend these lectures. We pray for our resource persons and all participants. Give us a retentive memory and give us a heart to be obedient throughout these lectures. This I pray and ask in the mighty name of our Lord and Savior Jesus Christ. Amen.
Amen. Thank you for that wonderful prayer. So, in a few minutes' time, our facilitator will start, Professor Mrs. Okudo. So, I hand over the mic to her. Enjoy your lectures today.
Thank you, sir.
Good morning, all.
Good morning, ma.
Good morning,
So you're all welcome in today's lecture. So we want to start with the first topic, general and special conditions of contract. I know since this week since last week you have been on special training, and we are all talking the same thing in the same line. Everybody comes to give their own topic and then proceed. So this morning, we want to look at the general and special conditions of contracts. We've heard so much about contracts, and we are now looking at what is it? What is general and special conditions of contract is? Thank you. So looking at the introduction, so we had, as at yesterday, we were talked about what reference for request for proposals. So this morning we want to look at the general and special conditions for contract. So the standard RFP contain 2 contract types, which are the most commonly used, namely the time-based and the lump sum contracts. So the general condition of contract, GCC, of time-based and lump sum types of contracts are very similar, since they are based on the general principles of contract law, laying down a framework of balanced and fair relationship between the parties and with identical mechanism for dispute resolution. If you look at that, often at times, lump sum, everything is put together. And then when you look at the other one, the time base. So based on the time, it all depends on the phenomenon. So differences are mainly related to the payment mechanism based on time and inputs or based on completion and acceptance of what deliverables. And the lump sum is when you have completed, you get your money. But in the time base, it is based on time. And the processing of changes or additional services in the scope of the work. So looking at in time-based contracts, the consultant provides services on a time basis according to the standards of professional practice and related quality specification. And the consultant is paid periodically based on the actual time spent in carrying out the services, but just like looking at the critical path method. Each section, as soon as you complete your section, in some contracts, you're asked to do the job based on what is on the timetable, on the schedule. And once you finish that one, you're paid off, and then the new section proceeds. So that's what we mean by time-based. So payments are based on contractual unit rates for the professional fees of the consultants experts multiplied by the actual time spent by the experts in executing what their assignment. And two, in the reimbursal expenses using actual expenses and or contractual agreed upon time prices. So time-based contracts require close supervision by procuring entity, that's the client. So the following are the key GCC clauses: the general provisions, the commencement, completion, modification, and termination of contract. Let's go back to A, the general provision. So definition of the parties and key contractual terms and the applicable law. So you first of all, because you must define who and who is involved, what are the key contractual terms, and what are the applicable laws. You don't just sign up a contract without checking up. Can I fit in? Can I be able to cope? Will it favor me? Or is it, or maybe, some of us will always say, let me just do it for doing it. No, not in contract. So you look at, again, the joint ventures, JV, with members jointly and severely liable to the procuring entity, PE, and the need to have a nominated JV leader who is authorized to act on behalf of the JV. So you also look at the word fraud and corruption and the sanctions that the PE will be entitled to impose in the cases of default by the consultant in adherence to the PE's anti-corruption policies. When you look at the commencement, completion, modification, and termination of contracts, the preconditions for contract effectiveness and the date of commencement of the services with reference to the SEC. So you must check up. When are you supposed to say, just like according to our timetable, today we have 2.5 hours to treat all these topics. And looking at it, there must be a commencement time. And then what is our commencement time? 9:55. And then there must be a completion time. And what is the completion time? Probably 9:55, 10:55. Then you talk about 12:30. Imagine within that period, you talk of a modification. What are we supposed to do? Do we need to take a break? And then you talk of termination of contract. Well, things are not working out the way it was stipulated. Therefore, can we terminate? So the preconditions for contract effectiveness and the date of commencement of the services with reference to the SEC, the duration of the services with reference to the date that is specified in the SEC, and the variations and changes to be mutually agreed. Contract is not something imposed. It is not a tyranny, neither is an autocratic, but it is a mutual agreement. What time is convenient for you? How long do you think you need? How much can you do? And how far can you go? Definition of force, measure situations, and the conditions for supervision of the services and contract terms. So we look at C, obligation of the consultant. There are things expected of the consultant. There are requirements, there is a mandatory. So the adherence by the consultant to the applicable professional standards in the execution of the contract and to hold the procuring entity interest supreme. Yes, whoever that is in charge, you must follow the standard. You don't say, let me have a shortcut. Even if you're taking shortcut, let the shortcut be able to deliver the standard. If at the end, the standard is compromised, automatically you have breached the contract. conflicts of interest rules whereby any default on such rules will lead to what? Termination of contract by the PE. The liability of the consultant under the contract and the obligation of the consultant to take the required type of insurance as per the values of cover specified in the SCC. Yes, because often at times we compromise there, and which is wrong. You look at the value of the work you're doing and thereby take up the right insurance premium. And if you don't take up the right insurance premium, what happens? When an accident occurs, you find that there will be serious losses because the insurance you took is just a cover-up. And who's supposed to take responsibility and then probably subsidize or take over is now being what's saved. Hence, you, the fellow involved, has to pay the bill. Then we talk about the what? Reporting obligation of the consultant as detailed in the SCC. Yes, there's always a detailed way of reporting your assignment. You don't just come up and say, you know now, as we agreed. There's nothing like that. It must follow the due process. That will take us to the consultants, experts, and sub-consultants. Who are the experts and who are the sub-consultants? The obligation of the consultants to engage the right caliber of qualified experts and consultants. You must understand when to bring in a professional. In this area, we cannot just manage. Therefore, we need a qualified, an expert in this area, and therefore go for it. And then sometimes there may be need for what? Sub-consultation. So the process of substitution of experts, approval of additional experts, removal of non-performing experts and sub-consultants, and the respective implication of on payments due to the consultant. This, we must understand that the process for substitution of experts, you follow it. You don't just wake up and say, okay, I've seen somebody I like, I see somebody I know, I see somebody whom I feel can do the work better. No, that must be, on what basis are you removing the person that is there? Did he breach the contract? Did he fail? Did he not meet up with the time? Did he not meet up with the delivery? So when those things are arrested and it is properly followed, then you talk about what? Yes, we can remove, and we discover that what he's doing actually is not what we need. Therefore, we look for somebody who has what we need. And on that basis, we can move on. So the basis for payment of the contractual rates for the consultant, expert's fee, and their leave entitlements. Yes, these are all things that are being considered in the general consultancy of contracts. So looking at the lump sum contracts are used mainly for assignments in which the scope and the duration of services and the required outputs of the consultant can be precisely defined in the GOR. So payments are linked to the consultant's outputs or deliverable, e.g. design, drawings, report, feasibility study, preparation of bidding documents or software programs. So lump sum contracts are easier to administer because they are based on the concept of the fixed price per output and for the entire scope of what services, and the payments are due on delivery or acceptance of clearly specified outputs and milestones. So the GCC in lump sum contracts are similar to those presented above for time-based contracts, and the difference with respect to the payment condition, delivery and completion, and changes in scope are explained in the SCC section. It is quite explicit. So the key GCC clauses that are customized in the SCC are the applicable law and the language of the contract are specified in the SCC. Whatever you are doing in the SCC, you must lay down. What are the language? What do we speak? What do we agree on? The addresses for correspondence of both the procuring entity, the client, and the consultant. We must know who we are addressing and whom we are linking with and whom we are relating with. The name of the lead member of the project of the joint venture is defined where relevant. The authorized representative of both the procuring entity and the consultants are nominated. The contract effectiveness conditions are defined, and failing realization of the effectiveness conditions, then either party can terminate the contract within X period of time. Yes, You don't just wake up one morning and say, I am tired, I want to pull out. No, it doesn't work like that. You must double in your requisition, and it must be considered, thought about, and discussed on the board, and then gone through, deliberated on before a final conclusion is made. So the date of commencement of the services is set in the SEC. Also, the date of expiration on the duration or the duration of the contract is set in the SEC. So any limitation of the professional liability of the consultant can be indicated in the SEC. So the MDBs recommend that the consultant's liability must never be less than the contract value. Note, MBS recommend that the consultant's liability must never be less than the contract value and must not be limited by a ceiling in the case of gross negligence or willful misconduct, but left to be decided as per the provision of the applicable law. That is why we have these laws of contract, because without it, anybody can bail the card. So the minimum required level of insurance coverage in accordance with applicable national laws as specified in the SEC. Where there is any uncertainty, the PE should seek guidance from what qualified legal or insurance experts to what ensure compliance. That's what I was referring to at the early stage, that you don't just take a third-party insurance. Look at the value of the contract. Look at what you're doing, and then go for it, because nobody plans for there to be any mishap or accident or what have you. So that in the case where it occurs, you don't have any reason to be afraid, because somebody is going to bear the cost. So the minimum required level of insurance coverage in accordance with applicable national laws are specified in the SEC. Where there is any uncertainty, the PE should seek guidance from qualified legal or insurance experts to ensure compliance. Any restriction on the use of the procuring entities, procuring entity document, or those of the consultants and e-software must be specified in the SEC. So any additional assistance that the procuring entity is to provide to the consultant must be specified in the SEC. So a ceiling contract price in foreign and local currencies is set in the SEC of time-based contracts, and the responsibility of the payment of the local taxes is also specified. You don't take it for granted. Often at times you discover that even the taxes you have to pay may even rob you of your profit. And that is why whenever you are talking about where you are bringing in the foreign currency, local currency, always check your taxes and be sure that everything is guided aright. So the price adjustment formula for payment in both foreign and local currency are specified in the SEC, as well as the applicable indices to be used in each formula. So the currency of payment are specified in the SEC. Are we paying in dollar? Are we paying in naira? Are we paying in euro? Are we paying in whichever currency? So the amount of the advance payment to the consultant is specified in the SEC. So the period for submission of periodic invoices of the consultants is specified in the SEC. So the interest rate applicable to late payment by the procuring entity is specified in the SEC. And the applicable rules of arbitration and number of arbitrators to be appointed and place of arbitration are specified in the SEC. This is one thing with procurement. It will spell out, it will define, it will state, and it will make sure that nothing is left undone. And if you are a procuring officer, these are the things you look into and carefully try to take responsibility. So the contract is composed of the following documents in deciding order of procedure. The contract agreement, there must be a contract agreement. The special conditions of contract, yes. What are those special conditions of contract? Do we want it to go like this? Must it be in the code room? Must it be hot? Must it be clear? It must be spelled out. So the general condition of contract. What is the general condition of contract? So all this, we can check it up on our appendices. You can see as it is stated there. So we want to look at the SEC for lump sum consultancy contracts. The SEC in lump sum contracts contains identical customization of the GCC clauses as indicated above in the context of time-based contracts, except for one, the contract price in foreign and local currencies fixed for the entire assignment, inclusive or exclusive of local taxes as applicable, and the tax breakdown is indicated. The payment schedule is indicated in the SEC as follows. The first payment, the amount is inserted as a percentage of the total contract price in relevant currency, that is, whether in Naira or dollar. Usually the first payment is an advance payment, which is made against the bank guarantee for the same amount and currency or currencies. Second payment upon delivery of a specified output. The first one we know is what advance, because we don't know whether this guy really has something, whether he has invested or spent all his money in acquisition some of those items. But along the way, he must be mobilized. So we'll call it the mobilization fee. So some call it mobilization, but we say it is an advance payment. So the second one is payment. Second payment is upon delivery of a specified output. Yes, let's look at, for instance, if it's a man that is building a house, you have given him the site, you show him the place, and then you have mobilized him. And then when you get to the site, you've not seen anything, the bush has not been cleared, it will be ridiculous for him to come around and you yourself begin to make payment without what delivery of a certain work. So second payment is upon delivery of a specified output. Second payment upon delivery of a specified output. So the third payment upon delivery of a specified. So subsequently, all the payments are now based on the conclusion of a particular output before the money is being paid. Finally, final payment upon full acceptance of all deliverables. You have checked up and say, okay, we have looked at everything and we could see that, oh yeah, it is okay. He's in order, he's in control, he's in charge. Hence, we've seen that everything is all correct. Hence, we go ahead and what? Settle him. And then he bows out of the site, and then we now take possession of our site. So we look at the lump sum contract forms. Will be composed of the following documents in descending order of priority. The contract agreement, yes, which was the same thing with GCC. There must be a contract agreement. There must be what special conditions of what? Contract. What type of contract? How do we want it? What are the conditions? Then we'll talk about the general conditions of contract. What does the general condition of contract? And then under the appendices, we have Appendix A, terms of reference, Appendix B, key experts, Appendix C, breakdown of contract prices, Appendix D, we'll talk about form of advance payment guarantee, and Appendix E, talk about our code of conduct. Did anybody breach or in any way went out of the actual requirements? We'll talk about receipt of proposal and technical evaluation. What do we mean by that? Receipt of proposal and technical evaluation. The procuring entity must allow sufficient time for the shortlisted consultants to prepare their proposal, usually about 4 weeks, for the time of dispatch of the RFP to the shortlisted consultants until proposal submission deadline. You don't rush them. You don't keep on, maybe because it's your person, you expect, and you have already planned ahead, prepared ahead, and then you think that you can bridge the gap. No. Still give them the time. It doesn't matter. You can submit your own a day after, a day before. Immediately the announcement is made, you submit it because you already prepared it. But it's always good to go back, cross-check, go in between the lines. What are the requirements? What are the specifications? What are the necessary? What are the things stated, so that you don't, in the hurry, in order to submit, you age yourself out of the competition. Before we start, you have already been disarmed. And that is why it is always good to take your time. So the consultant's proposals are required to be submitted in 2 separate sealed envelopes for all competitive selection methods. 1 technical envelope and 1 financial envelope. We already know what technical envelope means. Well, how are you going to, what are the technical experts you're going to, what are the technical requirement steps you're going to do? And then you talk about financial involvement. and then look at this. This is the way the money will come in like this. We are expecting this. If we are able to go to this, we get this. If we are giving this, we'll do this. If we are giving that, we'll do this. So receipts of the proposal is conducted in a public section, which may be attended by all participant consultancy firm. Yes, in this case, there's nothing like you can send someone, there's no proxy there, because tomorrow I say, I didn't send him, I did not send him, I brought it myself, I did it. So it is always an open event. It's not a hidden, it's not a go-between, it's not an intermediary. So it must be conducted openly. Late proposals are rejected and returned unopened to the respective sender. If your own comes at a maybe the time has expired, nobody opens it. If you open it, you can be sued for breach of contract, for theft of information. So technical evaluation is conducted first, and the financial envelopes are kept sealed. Technical evaluation must be processed strictly in line with what critical criteria and sub-criteria stipulated in the RFP document. Yes, why is it necessary? It is necessary because these are the determinants of the contract. And when it is not followed, what happens? You have already failed in the contract. And when you fail to specify and spell out what is quite needed and required, automatically you are saying the contract is not needed. So we'll move over to, I don't know, does anybody have any question there? And we'll take some questions in but if you are good to go, we can continue. Maybe at the end of the lecture, you can now ask your questions. Should we continue?
Yes, ma'am. Yes, ma'am. Yes, ma'am.
Okay. Come, this thing has scattered. Can you take me back to the evaluation? To the first something. First, the evaluation. No, not because of this particular topic evaluation. I was going down.
Yes.
Let's see the topic. Don't pass it. That is my mouse. Sorry. Which side is up? Which side is?
This one is like down. This one is up.
I want to bring it back to the evaluation. So looking at the evaluation of the technical proposal is undertaken by a proposal evaluation committee specifically appointed by the competent authority for this task. The committee is composed of a number of experts, members with knowledge in the field of the assignment, as well as experts in the relevant field of economics, procurement, legal, and financial discipline. Why is it important that you get experts? These are the people that understood or that will give guidance and direction and be able to explain and be able to interpret your reading, your tables and your figures. So when you don't bring an expert in this area, two blind men, what happened? As they keep moving, all of them will fall into a ditch. And that is why sometimes when you get to some buildings, after completion of the building, when you get there and look at the building, you wonder, say, who built this house? You wonder, who built this house? And then there is a problem. Why? Because it was not an expert. Probably they're using it for trial and error. Somebody are using it even for training. So, but in this case, when you're talking about evaluation of the technical proposal, you must bring experts in the economics, procurement, legal, and finance. So the technical evaluation process is composed of the following steps. Preliminary examination. Under preliminary examination is used to verify that the submitted proposals are in order as per the requirements of the RFP. Completeness, validity period, authorized signatures, etc. Does it have the completeness? Does it have the validity? Does it have the authorized signature? Or you check out whether the signature is compromised. B, talk about detailed technical evaluation, which is based on a point system that assesses the quality of each proposal received in relation to the requirement of the TOR and in line with the evaluation criteria specified in the issued RFP, such as past experience, proposal methodology, work plan, proposed key staff, transfer of knowledge, and local participation. A technical score is assigned for each proposal at the end of this step. Why is that done? To be certain that we have the right people on the table, or we have the right, we chose the right people. So typical technical evaluation table are shown as this. You look at the technical criteria, ranges, specific experience of the consultancy firm. What are the charges? 0 to 10. And then the consultant's proposed methodology for execution of the assignment. What method? Does he really understand the work? Can he really be trusted with the work? Does he have a proper idea? When you talk about methodology determines the product. If the method you adopt or the method you use, if it does not work, what happens? The work will fail. So that is why you must get an expert, somebody who has a proper understanding, somebody who has experience, somebody who has an insight. And then we look at what the third one is, what the consultants proposed 10, team composition and the qualification of the key experts. Who and who makes up the team? Do you have engineer there? Do you have professionals? Maybe you have a surveyor, maybe you have a town planner, maybe you have a builder, maybe you have this, you have that. Are these people, are they properly trained? Do they have the experience? Can they be dependable? Under that score, we have 30 to 60. Then you talk of transfer of knowledge components and training of procuring entity staff. This area, though it is called low, sometimes those of us in management and what have you, we rate this place high. Because if you cannot transfer your knowledge to another person, you have failed. Because you're selfish, you don't know how to handle cases, and you cannot. You know, some of us are so secretive that when it comes to field work and what have you, then you want to, I want to keep the knowledge yourself. If you keep the knowledge yourself, the knowledge dies with you. The day you die, you will bury you with the knowledge. Well, transfer it. You see, before you know it, so many has a proper understanding. And you have people you have mentored, you have people you have taught, you have people you have brought up. So transfer of knowledge, components, and training of procuring entity staff is very, very important. The people working under you, do they learn? Can they cooperate? Can they follow? Are they happy working with you? Then the other one we look at is what? Participation by national consultants as members of the key experts in the consultant team. Participation by national consult. You don't just only look at it or limit it. Say, well, this one I'm the champion. Let it be local champion. If you know somebody whom you know that has been a national consultant, rather than bring him to make the work, give it an added advantage. You say, no. I want to be the leader here. And since I'm going to say participation by national consultants as members of the key experts in the consultant team gives you about 0 to 10 points. Yes, and at the end, they have this 100%. So looking at the technical criteria and relevant sub-criteria, specific experience of the firm, number of relevant similar assignments. We talk about value of successful completed contracts, complexity, technology. when you look at the technical criteria, you are looking at what specified experience of the firm. The firm in question, how many projects have they delivered? Or are there people that, yes, you can look up to and say, yeah, these people are what good presenters and they are defenders of their what? Their proposal. And then you look at what relevant of sub criteria, number of relevant similar assignment. What similar assignments do you think they have done? Value of successful completedness, contrast, complexity. And so these are things you must evaluate, check up. Then the other one we look at is the consultant's proposed methodology for execution of their assignment. That's under the technical criteria. And then what is the relevant sub criteria? We'll talk about responsiveness to thought, including the what depth and quality of detail provided in the proposed methodology, implementation schedule, logistics arrangement, headquarters backstopping, and level of what innovations. Yes, this a kind of supplements an argument. Then you talk about the consultant's proposed team composition and the qualification of the key experts. How are they makeup? Hope they are all not engineers. Hope we're able to mix it up. The team composition, level of profession, and general qualifications, specific experience relevant to the assignment, local knowledge, and language. That is what the relevance of criteria. You're considering what the team composition, you look at the level of professional, then they look at the general qualification. These people involved and these people who can substitute, these people that can help us. Well, who are they? Specific experience, relevance to the specific experience, relevant to the assignment. Have they done something related to it? Can we depend on them? Local knowledge and language. Now, these people are from this area. They understand the people. They know where to get the raw material. They know where we can, the easiest place to move and how to meander and mingle, which is very, very important. Transfer of knowledge components and training of procuring entity staff, if required in the talk. Yes, often at times, you may need to do what? Train your particular staff, specifically on an IT matter based on requirements. We need this, we need that. And as a result of that, we need to send somebody for training. So training course description, quality of proposed trainers, mechanism for measuring training outcome. So you look at it, what is the training course description? What actually will the person be trained on? Quality of proposed trainers, who are those going to train him? Do they have experience? Do they have what it takes? Do they have the understanding? Then you again look at what? Mechanism for measuring and training outcomes. We also consider what is the outcome and how can we be able to measure and understand and be able to come to a compromise. Then the next we talk about is what? Participation by national consultants as members of the key experts in the consultancy team, if required in the talk. So we look at the number of nationals in the consultants, key experts team, etc., etc. Then that takes us to what? Looking at each criterion may be further divided into sub-criteria, as shown above, to make the proposal evaluation process more objective and measurable. Establishing sub-criteria for each technical criteria significantly enhances what? The comparability of assessments conducted by individual evaluation committee members and enables the evaluation committee members to identify and address any undue deviation in scoring. Because the essence of it is that we should know where we're going. We should know what we're looking for. Otherwise, some of us will score in this case, mostly when you don't have a proper understanding. Anybody you see just awarding marks without really a guide shows that he has no proper knowledge. Because if you have a proper knowledge, automatically, when somebody is presenting a case or presenting, you are looking at him, your mind is flowing and your spirit is going, okay, it's like this, and you are able to know where to place the score. But somebody who will just wake up, okay, is it that person? Is it that guy? Let's just call him. And sometimes we take the past experience, which we don't know whether it has expired, use it to justify. It's always good to give people opportunity and listen to them and evaluate them, which is very, very essential. So each evaluator will assess every proposal as per the evaluation guide and grant a qualitative grade to each what criteria. Typically very good, good, satisfactory, and poor. The evaluator would usually agree on appropriate indicative benchmark for the application of the grades. Normally, you see the graders will always look at themselves. What if it is nearly, maybe even sometimes you find out that at the end of this thing, the people say, can all of you go outside? And the panel of judges sit down. They say, yes, this guy, though he wasn't good in this area, wasn't good in this, but the way he handled this area, that was really wonderful. And then you see, they look at it, judge it critically, because they've all listened to it. And then you see, they will now come with a fair judgment. Well, though he was very good here, he didn't meet up here, he didn't meet up here, he didn't meet up here. Then how can you trust the contract with him? And then before you know it, somebody said, okay, this guy, he was good. And you see, it's not as if they agreed on that, but because they are experts in those areas, they are able to come up with fair judgment. That is why expertise is also very important. The ratings should then be converted into scores by multiplying the ratings with the weights allocated to the criteria or sub-criteria in the RFP. Yeah, that one is a simple thing, because when you have finished, you cannot just say, okay, how much scores do we put in this? And then all of you agree. And then from there, like the one we saw, then it is being multiplied. Whatever you put, the take has to, in the place where he's expected to have 15, and probably has to. And then you multiply 2 by that, and that tells you what he has, or 0.2 by that. So to maintain the professional and judgment-based nurture of the evaluation process and avoid reducing it to a purely mechanical exercise, it is recommended that the sub-criteria should not be what? Many. Because when there are too many, it becomes numerous. You don't know where to go, you don't know how to, even at a time you lose grip of what you're looking for, because it is too elaborate and it is too numerous. And then you say, which one are we going to cut? So the sub criteria should be restricted to a certain number or to a certain principle, so that when you go through it and when the results have been taken, you can justifiably be able to know why the decisions that were made. But when you made it so elaborate, it will lose its value. And sometimes in the course of breaking it down or having so many, you lose the value of what you're looking for. So specific experience, which is 5 to 10 points, are assigned below. Experience in similar project, experience in similar area and condition. So you look at it, what is the experience all about? Satisfactory. If the experience is in similar project, you've done a project similar to it, yes, that gives an idea. You understand it, or you may do better if the project is given to you. And then you say experience in similar area and condition. Maybe it is similar in the area, but not necessarily it's the same project. It may not be the same project, but it's similar in the area and condition. So under that grace, we have satisfactory, which is 60 to 80, good, which is 80 to 90, very good, which is 90 to 100. We say, why? How can satisfactory be 60 to 80? Yes, because first and foremost, you see, specific experience is 5 to 10 points assigned there. But on that, what are you considering? Experience in similar, this person must have had experience in similar project. So the project is reporting and telling us about is, when you look at it, it's almost, if not the same. And somebody that has that experience, what are you going to rate him? From 10 to 40? No, no. Because he has done a work before and he did it very well, probably. So you don't expect him to start as a mediocre. You expect him to start as somebody who has had an experience. So that is why the satisfactory can move from 60 to 80. You say, why is satisfactory moving up to 80? It's moving up to 80 because to you, somebody may look at it and say, though this work, it looks satisfactory, but I think it's very, very good. Can you see that? Then you look at good 80 to 90 and very good 90 to 100. So since all consultants have been shortlisted based on experience, their experience should not be rated normally less than satisfactory. That is the simple truth. You can't rate it less than satisfactory because it is already known and it is assumed it is above satisfactory. So methodology points you talk about, there's a technical approach and methodology. Then under that one we say is about 20 to 50 points assignment below. So we look at it. So we'll look at the technical approach and methodology. What is the technical approach? You look at the work plan, look at the organization and staffing. How is the organization and how is the staffing? Under satisfactory, we say satisfactory there, it could be 60, the same thing, similar to the previous. And we say very good, could be 80 to 90. Good could be 80 to 90. And very good could be what? 90 to 100. Why is it so? We're talking about methodology. Technical approach. You're talking about technical approach and you're talking about methodology. Do you have proper understanding? What kind of, this is a little bit more complex. And when it is complex, it is those with the complex mind that can understand what complexity is all about. And then you look at it, what is the work plan? Follow the work plan. How is it stated? That will determine whether this person knows what he's doing or not. And then you look at the organization and staffing. Who and who is involved, who and who are selected. And that will tell you where they are going. So the key professional staff, who are the key professional staff? And how do you pick them? How do you identify them? Say in that area, we're having 30 to 60 points assigned below. So under that, you talk about the team leader. That's the project management specialist. Who is a project manager? How many projects have you handled before you become a project manager? Project management is not just I've handled one project, therefore. No. If you handle one project, you need to handle another one. And moreover, the project you handle, on what area? Is it in engineering? Is it in electrical? Is it in, refrigeration? Project varies. So is it in, in arms? So whoever you talk about team leader, he must be an expert and professional in that particular area. Then you talk about water resource specialist, etc. So CV evaluation, this one now you now use CV. What experiences have you done? What works have you done? What have you achieved? What are your profile? What are the works you have done? What are the accumulated works you have done in that area? It's not just a matter of what we've looked at him from his presentation. We think it is like, no. You must look at his work to see the works he has done in the previous time. And that determines what is going to be. So general qualification takes 20 to 30 marks. Adequacy for the assignment takes 50 to 60. Experience in region through language takes about 10 to 20. So grade and rating similar. Grade and rating is similar to what methodology. So when you look at your grading and your rating, it is what typically similar to. So prior to summarizing the technical scope of each firm, due diligence should be conducted on the specific experience specified in their proposals. Similar assignments successfully completed. So we look at what similar assignments which are successfully completed. How did he do it? How was it? How long did it take him? What are the duration? What was the time gap? Did he meet up with the time? Did he meet up with the requirement? Was he able to deliver at the stipulated or at the agreed time? We also look at what background. Look at reference check. Reference checks check especially on the specific experience of the key professionals through information provided in their CVs. Yes, it's very, very important. You cannot overlook. So to strengthen transparency and objective in the evaluation process, the evaluation committee should not introduce any criterion not disclosed in the RFP. it will look absurd if in the middle of the course, then somebody comes up, let us change the rule. Why are you changing the rule? When you say let us change the rule, that means there is somebody you have at the back of your mind you want to age out or you want to favor. So that is why it is always good that the criterion disclosed or accepted should not be different from the one in the RFP. Except for the clarification sought by the evaluation committee, no additional information should have been obtained from consultants after proposal submission deadline. That is always the rule. That's the regulation. Once the proposal has been submitted, the deadline has been drawn, then you are not expected to do what? To go again, to begin to use that. I still have something to submit. You can keep it to yourself. Maybe at the point in the next submission, you can do that. Scores for each criterion should be added up to obtain the cumulative technical proposal score for each firm and assessed by each evaluator. So the aggregate individual evaluators score per proposal will be then averaged to determine the technical score by each firm. And that is why sometimes you go for interviews, you have the high hopes of passing, only to realize that maybe the other two favored you, but the other two did not favor you. Yes. But where you are professional, you know what you're doing, your presentations are in line, you follow the rule, you met up with the requirement, you met up with the request, demand, automatically, all of them will find a reason how you can go to. So where a significant variance is observed, an individual evaluator scores the reasons for the affected grading should be discussed and resolved by the evaluation committee members by consensus. Well, it is subject to what? It is obvious. But if it is not obvious, well, it's one of those things. It must be obvious before it can be going through. So the proposal which failed to achieve the required minimum technical score are declared non-responsive and rejected. The corresponding financial envelopes will be returned unopened after completing the evaluation process. Did you see that? If you failed in this area, your financial records will not be open. So that you don't go and cry outside. Somebody now use my report to go and justify or implement his own report. So everything is kept sealed so that at the end, the sealed one is still returned to you the way you sealed it. So the committee will then prepare the technical evaluation report indicating the ranking of the responsive technical proposal. And when that is done, we can now talk about consultants who submitted responsive technical proposal will then be notified of the date, time, and place of the public opening of the financial proposal and will be invited to attend the public opening ceremony at their cost. Usually, the date of the opening shall not be sooner than 1 week after the notification date of financial proposal opening is issued to enable consultants to make logistics planning. At the proposal site, at the proposal opening, the name of the consultants, their technical scores, and the offered prices shall be read aloud and recorded. A minute of the opening ceremony shall be prepared and signed by the committee members and the attendees. That is, in order to what? Let there be no prejudice, transparency. So we look at the combined technical and financial evaluation, where we say any arithmetic error shall be corrected and used in contract award, in time-based contract. So activities mentioned in the technical proposal, but not priced in the financial proposal, will be costed by the evaluation committee using the respective proposal unit prices and added to the respective proposal offered price for evaluation purposes only. That is, this is only done for the evaluation purposes, not just that it is the usual way. Therefore, anything that multiply my own, my money should increase or no. It is only during the evaluation where these are done. So arithmetic error are not considered in contract award in lump sum contract. Are you hearing me? You can hear it clearly. Arithmetic errors are not considered in contract award in lump sum contract because there's a lot of gaps which were captured, which are supposed to be captured. So unless the person did not capture. So the corrected or quoted prices will then be converted to the single currency and at the exchange rate specified in the RFP data sheet. Does anybody have any question?
Yes, ma. A question, ma.
Yes, who is that?
My regard Benjamin.
Sorry?
My regard Benjamin. Benjamin.
Okay, Benjamin.
Yes, ma.
Okay.
Yes, my question is on the arithmetic error that you talk about in lump sum that is not being considered. May I know the reason, ma?
What did you say?
You said the arithmetic error is not considered in a lump sum contract. May I know the reason?
Because in the lump sum contract, you find out that everything is put together. So when you talk of arithmetic, so what were you really actually calculating? Because often at times it is not specified. It is maybe from the DPC to the completion of the building, we decided to give you 10 billion. And then when you say the calculation is not, how did they feel? You know that what they gave you is excess. It's more than. So, and then you should be able to solve the problem and if possible, remain. And then how did you come up with arithmetic error? Unless in your quotation from the beginning, you did not follow the due process and you were just being, what I call it, being overconfident. Anyway, I can use my money and you're being philanthropist. So I just want to get this contract. Therefore, you decided to bid yourself solo. And when the contract is given to you, are you going to steal to finish the work? So
All right, noted, ma.
okay.
Thank you.
Okay, so I'm asked to give you 10 minutes break before we continue.
Hello, good morning, ma. My hand is up.
Who is that?
Good morning, ma. It's Mwebu Israel.
Sorry. Can you wait after the break? We proceed.
Okay,
It looks
okay.
like some people want to ease themselves, stretch their legs. Can we do
No
that?
problem. No problem.
That's this thing is blocking it. We can come back now. Miss Israel, are you back?
Yes, I'm here.
Yeah.
Good morning, ma.
Do we have any more questions? Other than Miss Israel's question, do we have any more questions? So after Israel, and after answering Israel questions, the engineer will take over.
Okay, bro.
Because we've come to the end of my lecture. So, Ms. Israel, can you go ahead with your question?
Okay, good morning, ma.
Morning.
Okay, my question is very simple. We have been told that the major thing you consider in technical evaluation is the past experience of the firm or the company. So I now want to ask, how can new company then coexist with these procurement laws? Understand, since they don't have past experience, there is no work being done for the first time, and all those things are being considered.
Nobody said, what we said is that past experience is an added advantage. Why is it so? You cannot have a team where everybody in the team are all novice. That is why the team are made up of various calibers and various types of people. And what does that mean? That is, you have somebody who has been handling that project. He's mentoring somebody who who just came in about a year or two. While you're there, you're picking experience. Are you getting me? So in each team, it's mixed up. It's not as if everybody there already have 10 years experience, 20 years experience. You have somebody who is 10 years, you have somebody who's 20, you have somebody who is 5, you have somebody that's his first time. Hello? Miss Israel.
I can hear you, ma.
We're with you, sir, ma'am.
Did you
I
understand?
can hear you.
Because if you're expecting that once you come in, that's why we
Yes,
say that there's a tutelage period. You must carry my portfolio before I can recommend you.
Okay.
When you have carried my portfolio for a year or two, I can always say that this guy has been working with me and he has the knowledge, he has the experience, you can trust him with this work. I think that answers your question.
Okay.
All right, thank you. Engineer,
Yes, ma. Thank you, ma.
Come and use my system.
Huh? Ndị
Good morning, my dear participants. My name is Engineer Dr.
Good morning, sir.
Yes, morning. So far, so good. I hope so. So I'm going to take you on financial evaluation.
Morning, sir.
Yes. I said my name is Dr. Collins Michichukwu Anya, CE-sPESS FUTO. And I'll take you on financial evaluation of proposals and award.
You're welcome, sir.
Thank you.
You're welcome, sir.
Thank you. Well, you've had a series of lectures on consultancy services. Talked about why they are needed, or the difference between consultancy services and other services and other procurement types like goods and works. Of course, you know that consultancy, what we have seen so far, is usually small, but small in price compared to goods and works, but it's always very, very essential and important because mistakes could lead to unmitigated circumstances that will lead to total failure of subsequent actions. So our highlights. These are our highlights. We are going to look at combined technical and financial evaluation, proposal evaluation reports, negotiation and contract finalization, notification of intention to award, standstill period, publication of contract award, and then look at some case studies. As you have been told previously, in consultancy services, you normally submit two proposals, a technical proposal and financial proposal. The technical proposal is evaluated first, and those that are found responsive, that is those that score above the threshold cutoff mark, are those whose financial proposals will be opened. So consultants who submitted a technical proposal will be notified of the date, time, and place of the public opening of the financial proposals. And they'll be invited to attend the public opening ceremony, of course, at their cost. So after the technical proposal report has been approved by the approving authority or the PE, those who pass the technical proposal will be called upon for the opening of their financial proposals. Those that did not meet all the cutoff mark, their financial proposal will not be opened. Rather, it will be returned unopened to them. So the date of opening shall not be sooner than 1 week after the notification date of financial opening. So the essence is to give time. So if it not be sooner than 1 week, that is, if you announce the time for opening today, you give them at least 1 week so that they will prepare for the exercise. And what goes on, they are the opening, the name of the consultants, the technical scores, and the prices they offered will be read aloud and recorded. See, this follows what you normally do under goods and works procurement, because these proceedings will be documented for future references. where maybe when there will be disagreement or during the standstill period, or even when you have the approval, no objection from DPP or FEC, Federal Executive Council, they may require to see what transpired. How did you arrive at the solution or the contractor or the consultant to award? So that is why it is necessary that there be proper documentation of the whole process. So a minute of the opening ceremony shall be prepared and signed by the committee members and the attendees. Then after the opening, the committee will now go in to do the necessary paperwork. And one of the things to do is to check the arithmetic errors. Say any arithmetic errors shall be corrected and used in contract award in time-based contracts. Of course, we have been told about time-based and lump sum contracts. Lump sum, the fixed group, fixed amount. Time-based, time, long duration. The scope may not have been properly defined as at the time the proposals were made. So, activities mentioned in the proposal were not priced in the financial proposal will be costed by the evaluation committee using the respective proposal pricing and added to the respective proposal offered price for evaluation purposes only. Then, for lump sum contracts, arithmetic errors are not considered. You know what I mean by arithmetic error? Because lump sum, you just give the final sum. So you may not be too into giving the details, unlike the case of time-based contract. And when there's arithmetic correction for the bidder or the consultant, he is bound to accept that correction. If he refuses to accept the correction, then his bid is rejected, his proposal is rejected. Then when we have finished going through the proposals, doing the arithmetic corrections, making sure that there are no deviations, there are no major deviations. Of course, if there's a major deviation in any proposal, then that proposal will be dropped. But if it is minor, it will be corrected. Then the proposal, the PE will undertake the combined technical plus financial evaluation using the weightings of quality stroke cost, which was stipulated in the RFP document. Of course, this is for quality and cost-based selection. In your RFP, you must have stated the weighting for quality or technical, and then cost. The weighting must add up to 100. So it's either 70, 30, 80, 20, or 90, 10. These are the common weighting normally used. And of course, the value to use depends on the complexity of the assignment of the work to be done. If it's very complex, then it can be 90-10. But the standard or the normal, the default is 80-20 for quality and cost-based selection. Then if it is something that can easily be done, then you can go down to 70-30. So the minimum weighting for quality is 70%, while the maximum for price is 30%. So the proposal that scored the highest combined weighted score will be recommended for award. That is for the quality and cost-based selection. We will later in our case study see how these scores are combined to come up with a single score, a weighted score for each of the consultants. Then when we have finished that, evaluation report is made and submitted for approval by the competent authority. As in this report, This report is and the financial evaluation. Now, this is a combination, how we do the combination. Remember, we said for quality and cost-based selection in your previous lecture, you are told that the quality and cost are combined. Now, this is the way they are combined. If you remember, the technical quality is called in terms of percentage. So you say this person scored 80, 70%, and so on. But that is different from the case of price. In terms of price is either in a currency, either naira, dollar, or whatever currency you are dealing with. So the question now will be, how can you combine these two when one is in percent and the other one is in a currency? So what we are going to do next is how you can do this combination. And this combination pertains only to quality and cost-based selection. It is the only selection where selection method where you combine the quality and cost at the same time to select the winner. So we have, say, QCBS is the only selection method where the technical and financial proposal are combined, selecting the winning proposal at the same time. The weight given to the proposal must have been stated in the request for proposal. The minimum weight for technical is 70%, like I said earlier, and the maximum for price is 30%. So it said here, this is a little bit mathematical, but I'll be slow so that, because this is the part of the main kernel of this assessment, evaluation of consultancy services. So we have the technical proposal weight given in the ROSP. That's what we mean by BP, which is in percent. So like I said earlier, TP could be 70% to 90%. Then you have the financial proposal weight, which will be range from 10% to 30%. Then let T be the technical score of a proposal. So the technical score of a proposal will denote as T, and F, the evaluated price of that proposal. Then FS, so the financial score of a proposal under consideration. Then you have FM as the evaluated price of the lowest proposal. That is among the prices offered by these consultants. The one that is the lowest is what we denote as FM. And then WT is our weighted technical score. Weighted technical score, you know, and WF, the weighted financial score. So the calculation you see by your right, the way we obtain weighted technical score and the financial score and the weighted financial score. So we have that WT, which is the weighted technical score of a proposal, is given by T, that is the technical score of that proposal, multiplied by TP over 100. I have gone this way so that for those who are not too conversant with mathematics can easily understand. Otherwise, TP can be a fraction, which is just the percentage given for weight divided by 100. For instance, if the percentage given to quality is 80%, TP is just the weight in that, just the fraction weight is 0.8. That is 80 divided by 100. So that's what we have here. T that is the proposal, technical proposal score multiplied by the weighting in percent divided by 100. That gives you the weighted score for that particular proposal. Now, FS is the financial score. For those who are very good in mathematics, they may not go through calculating financial score because it's a relative score. Relative in the sense that it's based on what the other people have called, or the cheapest or the lowest evaluated proposal. So FS is given by FM, which is the minimum or the least of the proposals, now in Naira or in dollar or currency, divided by the evaluated price of a proposal multiplied by 100. Take, for instance, a little example. Assuming the lowest proposal is 20 million Naira. Another proposal is 30 million. And you want to compute the relative score, the financial score of the proposal that its price is 30 million. Now, its score will be 20, that is the minimum evaluated score of all the proposals, divided by these proposals in question, each financial cost. That will be 20 divided by 30, multiplied by 100. So that will give you, that is about 66.67%. That will be the financial score of that proposal that has a price of 30 million, while the lowest price among the proposal is 20 million. So you now see that both the financial score and the technical score are now in the same unit, percent. So in this case now, it is easier for you to make a combination of the two. Because if you still leave the finance in Naira or in currency, then it becomes difficult to combine the two. You will also notice from that formula that the lowest evaluated price, the consultant with the lowest evaluated price will always have a financial score that is equal to 100%. Because in that formula now, FM and F will be the same. So FM will be 20 and F will be 20. That will be times 100 is 100%. So that is to say that when you are doing your financial analysis, the proposal that has the least evaluated score will have a financial score of 100%. Then to get the weighted score, financial score, multiply that financial score by the weight given to it in the RFP. That is what we have there, FS multiplied by FP over 100. Now the combined weighted score will be TW plus FW. So that will be WT plus WF, not the other way around. WT plus WF. We will still take an example on this because you must go home with this calculation, because that is how you come out to say this is the person to be awarded, this is the consultant to be awarded based on your calculation. So if you don't get it right, then you end up choosing the wrong consultant, and you end up having petitions. So we talked about the weighting. So the weight given to technical and financial score, 70 to 90, depending on the complexity of the assignment. And then for financial, it is 10 to 30%. 10 being for highly complex assignments and 30 for less complex assignments. And of course, this weight must be disclosed in the bidding documents. You must have stated this weight in the bidding documents. So before they even submit their bid, they know these are the weights that we used to evaluate them. In fixed budget selection, I said earlier that it is only in QCBA that you do a combination of your weighted, the technical and the quality and the cost evaluation, and they add them together to select a winner. In the other ones, it is not so. In fixed budget selection, of course, in fixed budget selection, the PE announces in the request for proposal that he has so and so amount for this assignment. So the amount is publicized, it is known. Then, after evaluating the technical proposals, as usual, those ones that met the threshold are the ones whose financial will be opened. Now, who is selected is the one that has highest technical score, whose proposal is within the budget. For instance, if you have a consultant who has a very highest score, but his price is outside the budget, that consultant will not be awarded, even though in terms of quality, he has the best score. Now you go to the next on the ranking, quality ranking. And then you consider that one too. If his price is also outside the budget, his proposal will also be rejected. So in the end, the one you will award is the one who has the highest technical score and whose price is within that budget. It doesn't matter if his price is the highest among the ones that are within the budget, provided he has the highest score and his price is within the budget. He is selected for the award. Then in the least cost selection, this is similar to what we do in most goods and works procurement. Among those who pass the technical evaluation, the one with the lowest evaluated price is the one that is selected. It doesn't matter whether he was number 10 in the quality ranking, provided his technical score is above the cutoff, and he has the lowest price among all the consultants there. That's the one that is recommended for selection. Then in quality-based selection, of course, we know in quality-based selection, the criteria is purely on quality. Price is not considered in the selection. So the one with the highest technical score is the only one whose financial proposal will be opened. That is the one the PE will negotiate with. for the contract. We'll see take an example in our case study to make this clearer. So when the technical and financial evaluation has been concluded, then a report will be produced. So you have a proposal evaluation report. The committee must prepare an overall evaluation report, both technical and financial, which will be submitted to the competent authority for approval. Of course, we know when we say competent authority, in our ministries, we have levels. At the CEO, you have the tenders, parastatal tenders board, ministerial tenders board, then you have the Federal Executive Council. So based on the threshold, we know which is the approving authority. So the report should technically include the following: the proposal invitation stages with respective dates and any deadline. That is, if there are extensions to the submission deadline, it will be included. The technical proposal evaluation sheet with indication of strengths and weaknesses of each proposal. This is like a table, where for each of the consultants, you will indicate their strengths and then their weaknesses. Then the functional proposal evaluation sheet, where this what we just discussed in the previous slides, where the evaluation was done. Then the contract award recommendation and potential issues to be discussed with the bidding consultant during contract negotiation. We have gone through all the proposals, both the technical and the financial. And in the course of this evaluation, you must have noticed some weaknesses or some gray areas which we have identified that will be discussed during the contract negotiation with the one that has been selected as the winner. To that report, we have minutes that will be attached to them, or documents, the minutes of technical and financial envelope opening sessions, which we talked about earlier. Now, individual evaluators working sheet. Individual evaluators working sheets. Why would this be needed? Like I said in the opening time, records will always be kept. And you have a committee, or not just a committee, the PE. You have an approving authority who will go ahead to give who will give a go ahead for you to award. And what will they base the award on? The recommendation is on what you have submitted. They go through these individual scores, how the evaluators have fared in scoring the people, for them to accept. Because it's a situation where one evaluator scored, maybe for a criteria, scores 5, another one is scoring 9, yet another one is scoring 2. That's a whole lot of discrepancies. The committee or the approving authority may want to know how they arrived at these rates. So they may have to revisit these working sheets. That is why it is necessary that all these are properly documented. Then the copy of the winning proposal. The negotiation and contracts finalization. Upon receipt of approval by the competent authority of the combined evaluation report, the PE shall invite the successful consultant for contract negotiation. That is, and what the discussion talk about, the end result is what we call the description of services, which is composed of the adjusted terms of reference I hope you know that TOR means terms of reference. As a result of the negotiation, relevant experts of the winning consultant's proposal and the final negotiated work plan. This is very important to note, work plan, because the work plan is what we use to monitor the progress of the consultants. At so and so point, you are supposed to have submitted this report or these drawings or what. So we can easily say, this is our work plan, and you use it to monitor your progress. Say no substantive changes to the terms of reference or the work plan are admissible during the negotiation. Because if there's a substantive change, then that means you have changed the assignment. There should not be substantive changes, because having such means that the assignment, that the great change in the assignment. So at the end of the negotiation, the parties will initiate the negotiated draft contract, which will be subject to the approval by the competent authority. I've explained what I mean by competent authority. That is the approving authority now. So how do you negotiate? Say award negotiation in various methods of consultancy selection. You know, for quality and cost-based selection, then the fixed budget selection and LCS as the least cost selection method. Price was a factor in choosing who the winner was. So negotiation will focus on discussion concerning refinement of the terms of reference. So when you are negotiating with the consultant in these three selection methods, your focus is on refinement of the terms of reference. You don't discuss the price. You don't start negotiating the price, because the price was a major factor in determining who the winner was. You can also discuss the methodology and work plan. The methodology is how the consultant is going to carry out the assignment. And then the work plan, and that of the ideas presented by the successful consultant in each winning proposal. So these are the major things we will discuss. Refinement of the terms of reference, the methodology, and then the work plan. So the negotiators can then discuss any desired adjustment to the procurement entities input, like facilities and logistics services. So you know, in many consultancy services, not just consultancy, even in goods and work, there are times that the PE will make inputs. Maybe if you are going to work in an environment, there are certain things that the PE may be providing the office, providing things like telecommunications. If you're going to work, if you are going to work in the PE's office as a consultant, there are those things and negotiate them. That's a part of the negotiation. What are the things you are going to provide? And in negotiating this, of course, each party has to look at the merit and the demerit of the actions.
So please, volume. Oh.
Volume?
Yes.
Okay. So let me start from that negotiation again. Say for quality
We
and
can hear
cost-based
loud
selection.
and clear. I think it should be from your side. We can hear him loud and clear.
On my volume to the last but
I wonder,
because
I can hear him loudly. Oh, check your own side.
Sir, please, I have a question.
Okay.
In having a negotiation, is there any rule guiding a negotiator?
Any room, how?
Any rule, any rule.
Like you said, this is what you said, that for quality and cost-based selection, you don't go negotiating the price. What you are looking at now is the terms of refinement of the terms of reference, not substantive change. And then the work plan. Because the price, you don't negotiate the price, because the price was one of the things that was used in selecting who won. So the rule you normally do is normal negotiation. Don't try to kill the contractor because you are going to work for him. Remember that if you are too hard, if the contractor or the consultant make mistakes because you are compromising, you are trying to compromise, then subsequently, every other thing that will be done will be wrong. We must remember that consultancy is the bedrock of most of the goods and works procurement. Because once it is wrong, every other thing coming downstream will be greatly affected. So in your negotiation, you have to be fair and just. Take, for instance, you want to design an auditorium, for instance, and the consultant has come with a design, he has won, and then you become too stringent in how things may be done. You may not be an expert. And in the end, it gives you a wrong design. That wrong design may look little in the terms of cost. You may think that, oh, I've gotten a very good cost. But when the construction is done and it's not effective, maybe your auditorium, when people are inside, they feel so hot. The objective has been defeated. And they may end up spending so much money trying to correct the mistake. That mistake that could have been corrected with just little giving in. So the rule is, like I said, do what is right. Do not try to squeeze the consultant to kill him because it's going to work for you. But remember that whatever, the consultant is not happy, will not get the best. So there's no financial negotiation can take place because it was part of the thing that was used in awarding, in selecting the consultant. The negotiation ends with a final terms of reference, work plan, and any desired extract of the consultant proposal, which are grouped together under the name description of service, which becomes appendix 1 of the contract. I guess that we have copies, or at least the recent leading document for consultants services. You can always get it from BPP's website if you don't have it. Because this will guide you so much in both in your evaluation, in your request, in fact, everything about the consultancy services. Under quality-based selection and other selection methods, where price is not a factor, like the consultant qualification selection, individual consultant selection. So what do you do? Say, following conclusion of negotiation and approval by the competent authority, the minutes and position and all the drafts and the draft contract, a notification of intention to award is sent to all competing consultants under QBS, and a standstill period is put in place for eventual complaints. The standstill period is the period in between you announcing your intention to award and the award period. Is the period that consultants who did not make it are allowed to make a complaint, if any. And within that period, they'll be clarified or debriefed. But it says for standstill, no standstill period is required under non-competitive bidding, non-competitive selection. Why? So no standstill period is required under non-competitive bidding. So consultant quality, qualification, selection, and individual consultant, and then SSS, that is emergency single source selection. Of course, single source selection, this is a selection in which normally you have with the emergency condition or when P1 consultant is qualified for that assignment. So there's no need, there's no other person that is competing. In that such situation, there's no standstill period. Then, upon the expiration of the standstill period, resolution of any complaint, the contract will be signed between the procuring entity and the successful consultant. I talked about the standstill period. So this is a period between the time of notification for award, notification to award. So when we have concluded our evaluation and the approving authority accepted, we will now announce our intention to award to so and so. We don't award it, you now give a period for people to lay their complaint, if any. It is that period that we call the standstill period. So this is negotiation award. How things goes. I will talk about this. What you can do during the things you can negotiate. Whether it is technical matters. These are the things you can negotiate: the technical approach, methodology, work plan, organization and staffing, counterpart personnel and facilities, training program when it is a specific component of the assignment. Then on the other hand, for financial, say staff rates, only for QBS, SSL, QCQS. Then reimbursable expenses. You know, you have reimbursable expenses, and then you have a professional fee. That's what you mean by staff rate there. Professional fee. Then the reimbursable are things like housing, transportation, then the currency of payment and payment conditions. These are the things that you can negotiate under financial matters. Then notification of intention to award. That after we have done our evaluation and a winner has been selected and the approving authority has given the go-ahead, we will now notify the consultants that we are about to award. So the PE will ensure the intention to award will issue the intention to award to the successful consultant with a copy to all responsive consultants. So all those that we did their financial evaluation, who did not, we will also let them know our intention to award. So the notice of intention to award will include name and address of the consultant with whom the client successfully negotiated the contract, the contract price of the successful proposal. So where the selection method requires the price offered by each consultant as read out and as evaluated. As read out when? During financial opening, proposal opening. Because when you, during the financial proposal opening, for each proposal, you raise it up, so and so consultants, you mention their price. Then the evaluated price is also what you say, you also state. Because the evaluated price may differ from the quoted price in the proposal. Because the quoted price, we are not subjected to check to see that all the arithmetic are in order. They say overall technical score and scores assigned for each criteria, sub-criteria to each consultant to how they scored. And then the final combined scores and final ranking of consultants. It normally will be QCBS. You rank after when you do your combined weighted combined score, then you now rank them, number 1, number 2, and so on. But of course, you know, well, there's always the number of consultants that will be invited to submit proposals, always stated. Then it also combined reason why the recipient tender was unsuccessful. That is for those who did not make it. Why their tender is unsuccessful. And then the expiry date of the standstill period. And the instruction on how to request debriefing if the consultant is interested. So now the standstill period. I've already talked about the standstill period. That is the period between the period, the announcement, intention to award, and then the awarding period. Say a standing period of 10 business days will apply. That is according to the paragraph 30 of the bidding document. We apply from the date of notification of intention to award. The standing period shall not apply where only one proposal was received or in response to an emergency. Why do we need the standstill period? Say is to avail unsuccessful firms the opportunity to A, request for debriefing, and or for them to make decision whether to file an official protest, so a complaint, concerning the result of proposal evaluation. You know, this is common because, like I said earlier, at the opening of the proposal, the financial proposals, every person took notice of what the other consultants submitted. And of course, the lowest among them may be hoping that, yes, I should win. Having known his technical score, he may be more hopeful that he's going to win. And then when finally it's not announced, he may be seeking to seek out, maybe complaining, why was I not awarded? Even though I was the least, I had the least price at the time the financial were opened. But remember that it was only the opening that was done publicly. The evaluation was not done publicly. So you do not know what may have gone wrong. You may request for the debriefing, and in that case, they will tell you why things did not go the way you wanted it. So the failure to submit a complaint within the standstill period will lead to forfeiture of the consultant's right to complain at a later stage. So you forever hold your peace if you do not complain during the standstill period, because it's period of the window left for you to raise your complaints and it will be attended to. So there will be no requirement for a standstill period in the following cases. We already said that only one proposal was submitted in an open competitive process. We have direct selection and emergency situations. Of course, direct selection and emergency situations are not ideal situations we want. Because the idea of procurement, the principle, one of the basic principles of procurement is that there should be competition. But direct selection will only occur when it is only that one consultant that can offer that service. In fact, if you do a normal consultant selection and you come up with only maybe one consultant passing the technical evaluation, I'm sure that the PE or the approving authority will be skeptical unless it is a special assignment that only one consultant has the quality. Otherwise, it is always possible to have a situation where there will be competition. So that is the basic principle of public procurement, competition. So why will it be only one person? The other case, the other situation where you will have is when there's a case of emergency. And remember, sometimes what we call emergency, is it actually emergency? For instance, a road is bad, and year in, year out, the PE sees that road, that it is bad. It doesn't want to put it in the budget or to make plan for its repair. Then one day it's announced that the governor will visit the local government or whatever. And overnight, the PE goes ahead, award contracts, does everything, and then now claim that this is emergency service. Of course, people do not accept that. So you have to know what really emergency is. Out of that, things that you have control over. So you have the debriefing of unsuccessful consultants. The debriefing of unsuccessful consultants promotes transparency, fairness, and accountability, while helping bidders improve future bids. It's like when we are in school and the teacher gives an assignment, and at the end, when people have submitted the assignment, they grade them. After grading, they come to the class and say, hey, Mr. A, this is why you scored B. You did not write the correct formula, or did not make a good substitution, or this tense you use here should be was instead of is. That is what kind of thing you do when you talk about debriefing. And by so doing, it promotes transparency, fairness, and accountability, while helping bidders improve future bids. When you tell the student or the people, this is where your errors are, next time you will improve. So it reduces disputes, strengthens market confidence, and ensures that procurement processes are seen as credible and competitive. Because you are being plain and open. This is why you failed, or this is why you did not make it. Then during the briefing, the PE must respond to any related question from the unsuccessful consultants. The briefing shall not include point-by-point comparison with other consultants' results. By point. Only address the consultant in question. Don't go bringing in the other consultants. Just like if you have an individual problem and the student comes to you, you address the student's problem. Don't start making comparison. Oh, Michael, you did this one. Yeah, you did this. You just address the consultant, what his faults or where his shortfalls are. Start making reference, coming to do a comparison with the submissions of other consultants. The information that is confidential or commercially sensitive to others should not be related or given out to the consultant during the briefing. If also several consultant may be done in writing or verbally within the duration of the standstill. So like we said earlier, this is done with the standstill period. The consultant will bear its own cost of attending a debriefing meeting. So you have contracts, you can use the writing or verbally through phone calls. If you decide to come physically, it is you that will bear the cost. Say, as a minimum, the debriefing shall repeat the information contained in the notification of intention to award. A written summary of each debriefing must be included in the official procurement records of the procuring entity. So the debriefing records must be kept. I can keep emphasizing this issue of records. But I know that you know that at the end of each year, those
Procurement, BPP, which regulates procurement in Nigeria, expects that you will furnish them with the records of all the procurement you did. So records are very important for future references. The request for the briefing by aggrieved consultant must be made within the stances period and must be attended by the procuring entity within the duration of stances period. So the procedure for filing a complaint is specified in the instruction to consultants, that's section 35.1 of the RFP's data sheet. So the procedure, you find it in that standard bidding document for consultancy services. So it says, upon expiry of the stances period or any extension thereof, and upon addressing any consultant or complaint filed within the stances period, the PE shall send notification of contract award to the successful consultant and requesting the consultant to sign and return the draft negotiated contract within 8 business days. This specified in the data sheet, the client shall simultaneously require the consultant to submit within 8 business days the beneficial ownership disclosure form. Wow. What do you mean by beneficial ownership disclosure form? Or beneficial ownership disclosure? You know, like what we call, there's a difference between beneficial owner and the legal owner. I'll give you an example. I may be the legal owner, my name may be the director of the company, but I may be fronting for somebody else who doesn't want to be, who want to be anonymous. So the decisions I may be making as a CEO or whatever may not actually be coming from me, but from the beneficial owner. It is very important that we know who this beneficial owner is. In fact, it is one of the requirements of the revised standard bidding documents that all the beneficial owners must be declared. Because for many reasons. One, fraud prevention. Because you don't know who actually is giving out the instruction, who is benefiting. But even collusion. What of a situation where the beneficial ownership is also part of the information team? That is possible because you can be working with a shared company. Secondly, if we know the beneficial owner, we may know if this is actually somebody, the PE may know if this is actually somebody you may want to do business with or not. I'll give you a live example. There was a case between a Swiss company and an Israeli company. What happened? The Israeli company was choosing the Swiss company, hiding the Swiss under the Swiss company to win contracts in some Middle East country where Israel was banned as a country they don't want to do business with. So this company negotiated with a Swedish company and then was winning contracts from those Middle East countries, which ordinarily, if they have come out on their own, they would not have been given those contracts. But because the Middle East companies do not know that the beneficial ownership of that company belonged to the Israelis. They were given the contract. Because only when the two companies, that the Israeli company and the Swedish company, had issues among themselves, that they went to court, that all these things were disclosed. So you see, you may end up funding your enemy because the beneficial ownership disclosure was not made. So it is now part of the requirement of PPP, our standard bidding document, to disclose the beneficial ownership. So there's a form that you fill. So contract approval and signature.
A welcome message to a new team member.
On receipt of approval of the draft contract by the competent authority, the contract is signed by the parties and the process for release of the advance payment to the consultant, if so provided for in the RFP, is started upon submission by the consultant of the corresponding unconditional bank guarantee for the same amount. Within 10 days, 10 business days, on the completion award, the PE shall publish the contract award notice in accordance with the provision of public procurement regulation. So you have to publish the award so that people will know, oh, that contract we went into to bid, this is now the winner, and it's made official. The essence of transparency, people now know how, who. Within 10 days of the registration award, the PE contract, the PE following contract signature and within the time limit prescribed by the PPA regulation is required to publish the contract award information on its website and or in at least 2 newspapers of national circulation or in the official gazette. So this award should be contained in the contract award, the name and address of the procuring entity, name and reference number of the contract being awarded, and the selection method used. Names of all consultants that submitted proposal and their proposal prices as read out at proposal opening and as evaluated. Names of all consultants whose proposals were rejected, either as non-responsive or as not meeting the qualification criteria or were not evaluated with the reasons therefore. The name of the successful consultant, the final total contract price, and the contract duration, and a summary of its scope. So that is the end of that. Any question before we go for the case studies? We will sharpen our brain a little. So let's go to the case studies. The case study 1, the combined evaluation. The technical scores and evaluated financial prices of consultants that submitted proposal for a consultancy assignment are given in table 1. The technical cutoff score is 75%. It says A, what is the fundamental error in table 1? How? B, what should be the recommendation of the evaluation committee if the technical to financial price rating is 80 to 20%, assuming a CE-sPESS selection method? So this is a typical evaluation normally we have in selection of consultants. So here we have 5 consultants. Their technical scores are given. 85 for ABC Consult, B and G had 82, XYZ 86, Grid Consult 70, Amazon Consult 88%, Coricia is in percent. And then their financial proposals. ABC has 56 million naira. B&G has 50 million naira. XYZ Limited has 64 million. Grid Consult 45 million. Amazon Consult 66 million. So the first question says, what is the fundamental error in table 1? The floor is now open. Okay, Miracle.
Yes, sir. I think the fundamental error is that the grid results, grid consult scored 70%, which is below the technical cutoff score of 75%.
Yes, the French will say très bien, and I say very good. Very good. See, so what it means that grid consult, you know what we said? It is only those whose technical proposal score is above or equal above the cutoff that their proposal should be opened. The question now will be, why did the consultant, did the committee go ahead to open the financial proposal of grid consult when it's scored 70%, which is less than the threshold, cutoff threshold of 75 for technical evaluation? Is that correct? Is that agreed? I want responses.
Yes.
Yes, sir, it's agreed.
Yes, sir.
So this table, where this will be
Yes, I agree.
a example. Otherwise, the PE, yes, has erred. Grid consult did not meet the threshold, cutoff threshold. So his financial not have been opened. So in our subsequent evaluation, we will neglect the submission from grid consult. So let's go ahead. Solution to case 1. There is according to procurement rules, it is only consultants whose technical scores are equal or greater than the cutoff score that their financial proposals will be opened. Grid consult had a technical score of 70, which is less than 75%. Technical, which is less than 75%, the technical cutoff score. Thus, the PE erred in opening the financial proposal of grid consult. It should have been returned to grid consult unopened. Yes, somebody has said that. That is the right thing to do. Now, we go to question B. Let's first move back to the question, to the data we have. So we have eliminated grid consult, saying that is not supposed to be among those financial proposals were opened. So we are not going to consider grid consult any further. We now have ABC consult, technical score of 85%, B&G Limited, 82%, XYZ Limited, 86%, Amazon Consult, 88%. Now for the financial, this is in Naira and Kobo. So 56 million, 54, 45, 56 million. Let me ask you a question. I don't know if it is one of the things you have talked so far. The question says, what should be the coordination evaluation committee if the technical to financial harassment is 80 to 20%, assuming a quality and cost-based selection method? Is it right for the PE to specify the quality and cost-based selection. From this data we have, is it right from the Nigerian perspective? I need answers.
Please, can you come again, please?
Okay, this is outside the question, but let's just say, this is case studies now. I said, if you look at that table, I said, is it right for the PE to specify a quality and cost-based selection method for this assignment based on this information you have? Or let me narrow it down. Based on the prices you have seen there, is it right?
Yes, it is. It is okay because it is
How?
50 million and above. It is 50 million and above, sir.
Très bien. Très bien. You see, the revised threshold, if you go to that revised threshold, you see that for proposals or assignments above 50 million or 50 million and above, the recommended selection method is quality and cost-based selection. So if you look at the prices offered, forget about grid consults, 56, 50, 64, 56. It's possible that, yes, if the PE has recommended quality and cost-based selection, that should be the appropriate method to use. So what this implies, what I don't try to emphasize is the need for us to also look at that threshold issued by BPP. Because that is what will guide you sometimes is a selection method. If the price is so and so very low, you can go for the lower, maybe LCS or even CQS. But if it's up to 50 million, then you use the default selection method of quality and cost-based selection. So that is emphasizing that threshold. You should always be conversant with it, because that is what will make you not to err. So that you know when you recommend one selection method, not only for consultancy, even for goods and works, when you need to do pre-qualification, it's there from that threshold. When it is not needed, it is there for the threshold. So make yourself to be very conversant with that threshold. Now let's go to the kernel of matter. So we said for illustration purpose, we are going to do a combined.
Charge the laptop. It's not this one. It's not this one.
Okay. So we are going to see how we combine the technical score and the financial cost. For us to do this, we'll just choose one of the consultants for the purpose of illustration. And I have chosen, is it Greg? What do I call it? Okay, that should be ABC. Please, that's Greg in ABC Consults, not Greg. I was trying to not to personalize the name. In the end, I didn't change, but then I'll give you the notes. It will be ABC that you see there. So when I say Greg, That's supposed to be ABC. So I'm going to use ABC. You do one, I use it to illustrate how the calculation is done. So for ABC Consult, they had a technical score of 85%. And their evaluated financial price is 56 million. From the evaluated prices of the consultants, the minimum is 50 million. That is our FM. And then from the question, the weighting given to technical is 80%, while for financial is 20%. So this is the data that goes for ABC. Please, Dr. Craig is ABC. That is 85%. Its technical score, its financial score price is 56 million, and the lowest evaluated price among the consultants was that belonged to B&G Limited, and it is 50 million.
Sorry.
What you see there as FM. And then TP is the technical proposal weighting for technical, specified in the request for proposal on the bidding document is 80%. And that for financial is 20%. So we are going to use those formulas to we want to calculate the combined weighted score for ABC Consult. So the weighted technical score, we said it is the technical score of the proposal multiplied by the TP, that's the weighting given to technical, divided by 100. That is 85 times 80 divided by 100, which will give us 68%. 68.00%. Please, it is always advisable to walk to 2 places of decimal, because rounding off your figures, rounding off poorly may give you wrong results. So I said it's 68.00%. Now, we look at the financial score. Financial score, not the financial weight. To remember what you said about financial score. It is a relative score. But you score financially is dependent on the lowest evaluated price. So, and we said the lowest evaluated price for this is 50 million. Now, the financial score of any other proposal will be this lowest price, 50 million, divided by the price offered by that consultant in question. So, multiplied by 100. So for ABC Limited, each financial score will be 50, that's the minimum price, divided by its own price, which is 56 million, multiplied by 100. That is 89.29%. So we now see that his Naira cost has been converted to a percent. So he now has 89.29%. And I said that this is relative. If, assuming the lowest score is, the lowest price is 52, this will come 52 over 56. So that score will change. So the financial score is relative. And as I also said, that going by this, because it's relative, the proposal with the least score, with the least price, the proposal with the least evaluated price will have a financial score of 100%. Because in that situation, both the denominator F
and the numerator
F will be equal, will be the same. So that will be 150/50 multiplied by 100, which is 100%. Now, the weighted score, the weighted financial score for ABC will now be 89.29, which is that financial score, multiplied by 20 divided by 100. And that will give us 17.86%. So for for ABC consorts, the combined weighted score will be WT plus WF, which is 68.00 plus 17.86, which is 85.86%. So this is the combined weighted score of ABC consorts. Are there questions before we go move on?
Yes.
Okay.
Sir,
I'm all ears.
sir, please go back to the table, sir.
The
table.
Okay. So I'm going to summarize the table here.
The table. The table.
That is the table. So please.
No, the case study table.
Okay, the case study table.
Yes.
Okay.
Okay. So let's assume the grid consults now made the technical score. Let's assume
that let's say is called 75 or 80.
Yes. Yes.
Fine.
And the financial proposal is still 45.
Yes. This is
How are
why
you
I
going to go
said
about it?
this is why I said that the financial score is a relative score. Relative that it depends on what the other persons are scoring. So in that case now, your lowest evaluated price is no longer 50, but 45. So the financial score of ABC consult will now be 45 divided by 56.
Okay.
That's why I said it is relative.
Okay.
So under this present situation we have now, B and G has the lowest price. And we saw its financial score will be 100%. But if, assuming Grid Consult has had a score of 80%, for instance, now, Grid Consult, B and G, its financial score will no longer be 100. It will be 45 divided by 50, multiplied by 100. That's 90%. You see why I said it's a relative score? That was a good question. So to make things clearer. Can we move ahead?
Yes, sir. Yes, sir.
Thank you. Merci beaucoup. So this is where we are. We have shown how these values are. I always advise that we work to 2 places of decimal. See the way I wrote it, 68.800%, not just 68, 89.29%, 17.86%, and this combined weighted score, 85.86%. Not just say it's 78.9, because there may be times you have to break a tie. So let's go forward. Now this is the table. So please still pardon me for this, Greg. I didn't want to, that was the original name I used, but I didn't want to personalize it because there may be a Greg here who may quarrel with me that he not win. So that should be ABC, please. In the slide, I'll give you, I'll make that change correctly. So this is the evaluation table. Greg has a price of 85, no, technical score of 85. That weighted score now is 85 times 80 or 0.8, that's 68. For B and G, the weighted score is 65. That is 65.60. Then for Giant, you have 68.80. The Amazon cost was 70.40, all in percentages. Now the weighted financial score. The weighted financial score. Like I said before, the weighted financial score is the financial score multiplied by the weighting given to financial in the RFP. So for Greg, we had used it for Greg. Now, if you look at B and G, it's 20%. 20%. B and G has a financial score of 100% because it had the lowest evaluated price. Now, we multiply it by the weighting is 20. The weighting is 20%. So when you now multiply 100 by 0.2, that's what will give you 20. So you see, you do the same for Amazon and for Giant. And then you have the combined weighted score ranging for ABC, it is 85.86%. For B and G, 85.6%. For Giant, 84.43%. And then for Amazon, 85.55%. Nice. Please. Please stop the noise.
Sorry, can mute her.
Thinking that
you are disturbing the class. So, having done calculated, we can now rank. See that the highest combined weighted score there is 85.86. You see why it is good you use at least 2 places of decimal. Look at the combined weighted score of ABC, that is Greg here, and that of B and G. One is 85.86, the other one is 85.60. If you are added to whole number, both of them will have 86. But because we now used 2 places of decimal, it's easy to see that there's a slight difference in their scores. So from our table, ABC Consult is ranked 1, B and G is ranked 2, Giants Limited is ranked 4, and Amazon Consult is ranked 3. Then the recommended for award, that should be Greg Consult or ABC Consult. That is how it is done. So is there any confusion here? So that we can view it. No confusion. So,
sir,
yes.
Per adventure, I know the probability is not likely, but per adventure, both Greg Consult and B&G have 85.86 together. What will be the decision?
You mean you can go to 3 places of decimal now? Well, it's always that difficult to just do all these things, then everything is the same. So the price, yeah. Well,
it's almost similar. Just the decimal is
that's why you have worked
0.60. I say peradventure
Yeah,
both
I want to 3 places of decimal. What if I want to 3 places of decimal? Because if they tie, you see, one thing you have to avoid is trying to show that maybe you are being biased. If they have the same score, then how do you separate them? I will say do it to 3 places of decimal because it's a rarity. Where you can have such a thing occurring, it's easier when you do shortlisting. You know what you mean by shortlisting?
Yes, sir.
In consultancy, when after your expression of interest advertisement, you may have so many number of consultants applying that, and you said for your interest, expression of interest that you're going to shortlist only say maybe 6. And assuming that they're up to 1,000, there's a probability that there may be ties in the score in the first 4 and so on. But in this case of evaluating the proposals, it's not that common. In fact, it will be a rare situation.
But I have something to say.
Okay.
I think in such scenario or situation, for me, if I should be the one, I will pick the person with the higher technical score than the higher financial score.
Why would you pick a person with higher technical score? Okay, now if the person who has the lower price now complains that you discriminated against him, on what basis will you make that judgment?
Okay.
This is why it is always good to spell out every condition, because no matter what decision you take now, somebody will see it as being biased. Now you said you take the technical. Somebody else, like I will say, I will take the one with the lower financial score, because since I am satisfied that 2 of them have the capability to do the assignment, having passed the technical, that my interest is now focused on the price. But you now see your own view. You are still considering the technical aspect to be of much greater importance. Another person will now look at it the other way. No, because even the person who lost, if you use the technical aspect to judge him, we now say, but I have passed the technical one, so I am qualified and my price is cheaper. Why don't you give it to me? So you see why the argument can go either way. So can we continue?
Yes, sir.
Thank you. So further questions. It says, using the data of case 1, if the weighting ratio in question A is 70 to 30, who would you recommend for the award? Then if the ratio is 90 to 10, which firm would you recommend for the award? Well,
okay. I think for this question now, anyhow you want to reshuffle the ratio, A, B, C consult will always win. Because
you think so?
That with the 70-30, ADB is okay. There is something I understood. I've checked something, and when you do it 70-30, the B and G will come up. And when you keep increasing the ratio, it will still be coming up. The ones below will be coming. The more you increase the ratio, the lower ones will be coming up. So that's what I just.
Okay, so now before we go to that one, we are still coming to that A and B, right? Let's look at C and D. We'll still come back to A and B because after we'll take a little solution. But I don't think we have looked at it is that correct.
You calculate again.
No, we'll come back to it, but let's look at C. Say, which firm will you recommend for award if least cost selection method is employed? give reasons for your answer. So let's go back to that table. Say, which firm will you recommend for award if least cost selection is employed? So this is the table. Oh. So this is the table. So which one will you recommend for award if least cost selection is recommended?
B and G. So.
B and G. Why?
Because it has the lowest cost among those that pass the pass mark.
Fabian. Good.
Yes, he's correct.
It's B and G because LCS says award to the consultants with the lowest price among those that pass the technical threshold, and B and G had the lowest price, so that will be our winner. Fabian. So let's go to question T or D. Say if fixed budget selection is used, which firm will you recommend, given that the stated budget in the RFP is 60 million? So we are assuming that in the RFP, the PE says he's going to use fixed budget selection method, and that he has 60 million in his for this assignment. So which firm will you recommend? Let's go back to our table.
ABC.
You say which one?
ABC. ABC Consult.
ABC Consult. How?
Please, can you go back to the table, sir?
I'm there. I don't see the table.
No. Okay, no. Okay, now I can see it now, sir. Yes, sir.
ABC Consult, sir.
ABC Consult.
Yes.
Why?
Because it is within the budget and it has the higher technical score than B and G.
But okay.
No, but they have
Amazon
changed it to
has the
60.
highest technical score.
Yes, it has 85%, while B and G has 82%. Although all the two fell within the budget.
So what I want to say is,
okay,
for the ABC is above the technical cutoff mark, and the financial proposal is within the range of that 60 million. Is not above, but is within. Because if we are to use B and G is okay, but it's below the one of ABC. So ABC is the one that has a close financial proposal to the 60 million.
No, wait, get it. Let me get it. Say B and G did what?
ABC is the one that has the closest financial proposal to the 60 million that was budgeted.
Closest? Are you judging by how close it is? Is it what you're using to judge how close it is?
Well, it's not by the close, because one, I consider the one that passed the cutoff mark. Two, I also consider the technical score. And three, I also consider the financial proposal, which is close to the 60 million. And it's not above, but it's within the 60 million.
See, what you are right, but what I'm quarreling with you is that term, close. It is no matter that the correct thing is that it is within budget. Now, assuming B and G had a score of 86%, B and G will win, even though the price is not closer, is far away from 60 than 56. So you are right, but the reason we are giving is not well refined. ABC Consult will be the winner because among those ones whose their price is within the range, it has the highest score. Amazon Consult has the highest score, but it has a price of 66 million, which is outside.
Higher than the benchmark.
So it is eliminated. XYZ is the next. XYZ has a score of 86%, but its financial is also higher, it's also outside the budget.
The benchmark.
Now we move to the third one, which is ABC. ABC has a score of 55%, and its price of 56 is within the budget.
Yes.
Therefore, be the one that is recommended. Right? So
yes, sir.
Let's go back. The last one.
The questions.
Same question. You have a question?
No, sir. No, sir.
Okay. Wants to stop sharing that.
Okay, sir. On the question E, I don't know if you are to attempt.
Wait, I'm coming.
Okay.
Please, you not also know what's in here. Okay. Okay. So I want to go back to the A and B, where the weights are being changed. I have to go back to A and B, where the weights are being changed. You know, I have developed an Excel worksheet that can be used to analyze questions like this. So my listen is still sharing. Can you see the screen?
No, sir. No, sir.
It's halfway, sir.
No.
You have not project the screen. So if you project, it will show properly.
Doing partially, yeah.
Doing partially. My own has to be. Let me stop share.
You can close the Excel. The Excel is at the front of the screen. I think that's the reason.
It has been closed here, not showing my system.
It's still showing, and it is taking a major part of the screen.
No, doing here. No, this one. So Okay, can you see it now? Hello?
Yes, we can see it now.
Can see it now?
Yes, sir.
So, you can Excel spreadsheet. Now,
Sorry, I can't see it. Oh.
Uh-uh.
It's not showing my screen. Oh. It's not showing my own screen. I don't know. My own is not showing. Oh.
It's an Excel document. So
this Excel document,
So
and
I
it show
can't
you.
see anything.
Yeah, if it's an, I know it's an Excel document. It's supposed to show now. It's not showing on my own yet.
Oh, it's very visible. You can see it.
if you are not looking at someone else,
You can see
then
it's showing now.
You can see it. Everything is clear.
I don't know.
Yes,
It's
we
not
can
clear. I
see
can't
it.
see it though.
Uh-uh.
No, okay.
I using phone to
Sir, please,
laptop.
maybe she zoom it in.
I'm using laptop. Oh.
Maybe she zoom out, sir.
Come out. Okay.
That question, it's
I'll show
100%.
If I zoom out,
I
then
can
I'll
see
not be
the
able to
screen.
demonstrate what I want.
Maybe take it to 70%.
That's it. I should zoom it.
the icon is at the bottom.
At the bottom, you see 100%.
You see 100%.
Hello, please.
Bottom
What are
right.
you seeing on your screen, please? Can somebody tell me what you are seeing on your screen?
Me, I'm
Solution
seeing
to
a blank,
the
just a blank space on my
What
screen.
I can see solution to case study 5 on selection of consultants using QCBS method. I can see FEM, technical source under FEM, percentage, financial proposal. We have lowest financial price equals 50. And at
Thank
the
you so
last,
much.
at column E, I can see Amazon consult. Under Amazon consult, I can see 88, under 88, under financial proposal 66. So
So
I
please,
can see the screen.
anybody that is not seeing it, you can as well log out and re-log in again. Please, if you are not seeing it, please just log in and log out and log in again.
I will do that. I will do that right now.
Okay. So why I have brought this
Okay,
table?
I can see it now. I can see it now.
Okay, thank you. Why I have decided to use this Excel sheet is that it will help us in answering those questions numbers 1, A and B. Now, sorry, I still have my Greg as Greg instead of ABC. Pardon me for that. But what you are seeing here shows a technical weighting of 80 and 20%. This is exactly the problem we solved using 80, 20%. And our winner we saw them was
is it for question D?
No, the that we have now is, I wanted to show you how this thing works. Excuse me.
BNG.
So, yeah. So you see, our winner was Great Consults. You say recommended for award. You can see that. Now I am going to change the weighting. So I go back. If you look at it, say lowest price here is 50. This has been automated. So now the technical price, go and say 70, 30. So I'll change it to 70 and this 30. So let's see what happens. So you see the outcome now. B and G is now the winner. So look at the ranking. Greg is now number 2. B and G number 1, Giant 4, and Amazon number 3.
Yeah.
So I'll give you this slide, but it's have been programmed that once you change the weightings, then it calculates itself and comes with another winner, maybe another winner. So we see that for this, Great Consult is no longer the winner, but now B and G Limited. So now let's go back and change the weighting to 90-10. Let's see what happens. I change this 90.
Amazon will carry the cup.
90-10. And let's see. You see our ranking has changed. Now, there are things to learn from this. We have seen Amazon now is the winner. When it was 80-20, Greg was the winner. 70-30, B&G was the winner. So you see the person who said that B&G will always win, no matter how you change the weighting. You see, it is wrong. So B&G has not won.
Amazon.
So, well, this example or this case study also emphasize the need. I think you will still do ICT in procurement. You can see that you can develop templates like this for your work in the office. Because if I try to change this course now automatically you have the new results. Or if I try to change the prices, it automatically update. For instance, if assuming that B&G had a price of let's say 62. You see now, the lowest price now becomes that of ABC, that is Greg, which is now 56. And your computations will change. So Amazon is still the winner. You can develop things like this that will help you do your evaluation rapidly and very accurate. So I'll stop sharing this and go back to the question. So the question says, that's question number E. Say if the in-house estimate, you can see my screen, Abi?
Yes.
Yes, sir.
So now we see question E. It says if the in-house estimate is 64 million and the QBS is to apply, which firm should be recommended? And what major item based on information should be discussed during negotiation?
I think the Amazon, because from the definition of QBS is a method whereby the quality of the technical proposal is the only basis for giving or awarding the consult or selecting the winner. So Amazon is the one leading there.
So are we agreed on that? Let's go back to that table. So this is our table. According to you, that QBS, the highest technical score, the consultant with that will be awarded. And here we have the score of 8%, a technical score, and that is the highest. So what I say that Amazon should be the one recommended for award. Correct. Très bien. So let's move on. It says, what major item based on the information on table 1 should be discussed in negotiation?
So I think the first one is negotiating on the price so that it will be within the range of their in-house budget, the 64 million, because Amazon is going above that with 2 million. So the first thing is to negotiate so that the money will come down to 64 million, which they already budgeted. And also to review the staffing schedule and reimbursement expenses. That's my own thinking.
Any other contrary opinion? Yes, you are right. You can negotiate the price because this is a quality cost-based selection. The price was not used in selecting the winner. So not purely on technical grounds. So now that you have seen that Amazon had the highest quality, and that's only one person that his financial is opened, you can negotiate the price. That is one thing we are sure. We are going to negotiate the price because Amazon had a price of 66 million. And our budget, nothing says that we must peg him to 64, which we had, he has estimate. We can still go down to even price him 60 or even lower. So that is one of the things we are sure we are going to negotiate. That is based on what information given on the table. So you are right. Now, it says, let's look at F. For the result obtained in all the exercises, including a case study, explain why it is important that all evaluation criteria be made known in the request for proposal. So, somebody give me an answer.
Okay, so I think first of all is because it ensures fairness and transparency and also reduce disputes and prevent arbitrary evaluation. I don't know if I'm getting
So based on this thing, this exercise we have done, based on this exercise, you have done a lot of things. One, you have changed the selection method. We have changed the weighting ratios. So based on the results we have obtained, he says, why is it important that all evaluation criteria be made known in the RFP? Now let's look at it. You know, assuming, for instance, we are using a QCBS, and we didn't even specify that we are going to use QCBS. Then you start your evaluation. And I have interest in one of the consultants. After seeing the technical scores and then seeing the financial score, say, look, we are going to use LCS because my own person had the least score. Or then the other consultant will say, no, we use QCBS. Maybe because his own person, he has seen the performance of his own consultant. The person is supporting.
Yes.
In that case, there will be confusion. From what this exercise we have done, we see that changing some information
Procurement method.
outcome entirely.
Yes,
When it was 80-20 for QCBS, ABC Consultant, Great Consultant was the winner. We now changed to 70-30. B&G became the winner. And now we change it to 90-10. We saw Amazon winning. So what would have happened if you not state which particular the weighting you will use? There will be confusion. Whichever one now you do, whichever way you decide to work on it, people will accuse you of being biased. They will now ask you what informed your choice of 70-30 during the evaluation process. Then you say it is 90-10. What informed it? So no matter who loses or who wins, there will be questions. Now, again, if you look at for the different methods, where we now say LCS, we had P&G winning. When we said QBS, we had Amazon winning. And we said FBS, we had Greg winning. So it is of extreme importance that the criteria for evaluation be stated in the RFP clearly, so that there will not be ambiguity, there will be fairness, and you will not be accused of being biased in your assessment. If we do not state which particular method, and then during the process, you start choosing the method of selection, then that your outcome will never be credible, because some people always see it as being biased. That is the answer to that question. So there's another study here. This one is a little bit longer. It encompasses not just what you just treated, but what normally may happen in selection of consultants. So I read, so while developing the scope of service and deliverables, the client stated that about 4,000 SMEs will be evaluated by this firm. The general and specific experience of the firm were stated as follows. As this was now what the terms of reference, the requirement state. Says a minimum of 10 years post-registration experience and demonstrable experience of 2 contracts in the evaluation of firm capacity during the last 5 years we are required. Staff effort was estimated at 8 staff months by 4 key staff, with each staff possessing a minimum of MSc in social science and 5 years experience in the area of the assignment. So this was the evaluation criteria stated. Now, during the evaluation, 5 evaluators assigned the following scores to firm A on a scale of 10. Now, for general experience, the evaluator A scored 4, scored the exact firm 4, while evaluator B scored 6, C scored it 5, D scored it 8, and E scored it 8. That's a general experience for this company, for this firm. This was what the evaluator scored: 4, 6, 5, 8, and 8. Therefore, specific experience is scored here 4 by evaluator A, B 4, 2 by evaluator B, C by evaluator C, then 6 evaluator D, and E, and 8, sorry, for evaluator E. The scores they assigned to the team leader were for educational qualification. A scored him 3, B scored him 4, C scored 5, D scored him 8, and E scored him 8. And then for specific experience, the scores were respectively 7, 7, 4, 8, and 8. Let's rehearse this. We have a consultancy assignment, and the client has stated, he said he's developing the scope of service available for about 4,000 SMEs and small, medium enterprises. That's what they're going to evaluate. And then he said a minimum of 10 years post-registration experience and demonstrable experience of 2 contractors, of 2 contracts in the evaluation of a firm. That is, they must have done 2 contracts, similar contracts, the last 5 years. Then they went out to list the qualification of the key staffs needed. Now, during the evaluation, we have 5 evaluators, A, B, C, D, and E. For each of the criteria, they had their scores. For general experience, they scored respectively 4, 6, 5, 8, and 8, and so on for the other criteria. Now, the contract was awarded in the sum of $1 million. The payment schedule was as follows: sign of contract and submission of insertion report, 10%. That's 10% of the contract sum will be paid. Submission of report on the evaluation of 30% of SMEs, you have 35% of the contract sum paid. The submission of report of evaluation of 30% SMEs, another 30% paid. Then report of evaluation of 40% SMEs, you have 25% paid. The contract has a provision for extension for another 1 year. Now, during implementation, the firm was very magnanimous to use 8 key staff instead of 4. However, 7 of the 8 staff used had less educational qualification and specific experience specified in the contract. But the contract was delivered on time. Total sum of $1 million was paid at the end of the first year, while a few deliverables not made were transferred to the contract extension for another 1 year. He said you provide your perspective on this transaction. This one is a little bit demanding. But well, let's go quickly because so these are the things we are looking at. So the scope of work. So the scope of work must be defined clearly and unambiguously. If you look at the narrative, it says about is not specific, about 4,000. What will you say 4,100? It's still about 4,000. It means 4,200 can still say it's about 4,000. So say the reference to about 4,000 SMEs lack try to articulate the scope adequately. So, ambiguous to say about. In fact, in specification writing, we don't use such words like best or as desired, because it leaves a lot to be desired. So saying about 4,000 is ambiguous. The such ambiguity can lead to disputes during implementation and may result in delays in completing the assignment. So another thing you look at is uniformity in scoring. It's the year of registration of where the firm meets or exceeds the minimum post-incorporation experience requirement. All evaluators should consistently award the maximum score. You know, it's always sometimes difficult to remove subjectivity when evaluating consultants. Because in many instances, you are going to evaluate by a point basis. It is easier when you do that in case of goods and works, where you may use a pass or fail basis. It is much easier for every person to see this is either pass or it is fail. Have you done up to 5 similar contracts? Yes, pass. No, fail. But look at what happens in consultancy. You start allocating marks. And when you do that, people can be subjective rather than being objective. So you see, throughout this evaluation, that was common. You see situation where one evaluator will score the firm 3. And on the same criteria, another evaluator is scoring is scoring that same firm 8. What justifies that great difference? There could be a lot of reasons, but one is that for such things, you can just see that there's an element of biasness among the evaluators. Well, one scores 3 on the same criteria, and the evaluator is scoring the same thing, 8. So throughout the whole thing, you hear it happening. So this is where we'll end for today, for this class. Now, questions before the next. Okay, you're going on break. Okay, are there questions? Otherwise, we go on break. 15 minutes break.
Thank you very much, sir, for the wonderful presentation. Thank you, sir.
Thank you.
Thank you, sir.
Thank you. So have a wonderful day. The rest of the
You too, sir.
lecture, Professor Akujobi will be coming to handle you. Thank you and have a nice day.
Thank you, sir.
Have a nice day, sir.
Thank you, sir.
Thank you, sir.
Thank you. Thank you.
Thank you very much, sir.
Welcome.
Thank you, sir.
We will have 15 minutes break before the next facilitator will come in, please. 15 minutes break.
Thank you, sir.
Okay, sir. Thank you, sir.
Thank you.
You're welcome.
Oh, no, no.
Good afternoon, all.
Good afternoon, sir.
Good afternoon, sir.
Good afternoon. You're welcome to the. I think this should be our last for the day. Good afternoon.
Good afternoon, sir.
Yes, sir. So,
Are we back from the break?
Yes, sir. Good afternoon, sir. We are back.
Okay, good. We shall try to manage our time the best way we can to see that we get something meaningful out of the entire exercise. We shall be looking at the procurement of low value, commonly used items under procedures for small value contracts. By the way, my name is Professor ABC Akujobi. I've seen some of my friends in the group. I hope I'm right. Hello, class. Can you still hear me?
yes, sir. Yes, you can hear you, sir.
Okay, good.
Yes, sir.
So we can fire on, right? So procurement of goods, works, non-consultancy services, and the ICT. Precisely dealing on procurement of low valued, commonly used items. So we shall be looking at them under the scope of goods, works, and then consultants or services. The design of this particular session will be, it will come in two ways. The first strand of it is what we are having presently. This shouldn't take us more than an hour. By tomorrow, I think 9:45, we are giving our own time. My second shall come with case studies or uses as the case may be. So, in general, while trying to procure these goods, we are expected to maintain a register of potential suppliers, contractors, or consultants. However, in situations where such a register does not exist of comprising of these suppliers, contractors, and consultants, it is expected, especially when the PE is an ongoing, that is a going concern, that is, this has been in existence beyond that particular period which you are trying to evaluate. It is expected there should be some audit trails of sources of firms or individuals who have been having such business transactions with them. So such audit trails will give you an idea of where to avail yourself the opportunity of having such suppliers, contractors, or consultants. That's what we actually mean. But in terms of the actual request for quotation, especially with specification of on goods or small works, certain things are expected to happen under planning and initiation. For instance, goods to be procured should be based on collective decisions of the team. It should be a team spirit, a teamwork, where every member is expected to contribute to contribute to what should be supplied in the first instance, such that even that supply, when it happens, should be able to help the PE in achieving the organizational goal within the plan of the organization too. Also, it is expected that there should be a conduct of market survey. There should be market survey. What is the essence of conducting a market survey? To be able to determine whether such goods actually exist. And when they exist, what is the price range within which they could be procured? So all these are part of the planning and the initiation. When that is done, enter agreed items in the procurement plan for clearance by management and uploaded in the open contracting portal as specified by the BPP. There should also be proper segregation of duties. Who does what? So that no one person or individual does it all. And also roles wouldn't have to overlap. That is essentially avoiding conflict of interest or roles. So there should also be open, and it should also be, it is expected that there should be files open for each of the procurement activities as a guide. So also review the procurement plan to know the time frame agreed to initiate the procurement process for each activity, and in collaboration with the user department, request authorization from the relevant approving authority to initiate the procurement process. Essentially, we are saying here that there should be some impulse from the user departments, because you don't just procure, you're procuring for a particular purpose, has to be carried out by different departments that should use that particular item. And the end result being that there should be value for money, and then achievement of effective service or successful service delivery by the procuring entity, which is the whole sum of whatever procurement activity that we are carrying out. Now, when you must have done the review, constitute a procurement committee. So that procurement committee, its task will be to review the procurement plan to know the time frame agreed to initiate the procurement process. Then evaluate carry out some evaluation, which should include a representative of the user department and the officials with proficiency in the procurement area. The procurement committee always shall be an odd number in order to enable them reach a decision in situations where it is necessary for them to carry out a vote in order to now carry to know which of the decisions to carry out. So it is expected in this way that when such a committee is formed, which we call the evaluation committee, the eventual procurement should be in tandem with what is actually required by the user departments. So in collaboration with the user department and with the help of technical experts, as the case may be, we should be able to draw up technical specifications for the goods to be procured. Remember, like we just finished with the last thing we talked about constitution of procurement committee. Such committee should be a committee of experts who actually know what is actually required and the functionality of the items being procured. Invariably, like around peg in a round hole. If you are procuring an engineering equipment or item of goods, it should be engineers that should be at the committee in combination with the experts in procurement unit. That's what we mean then. So, references to brand names, catalog numbers, or similar classifications shall be avoided. If it is justified to specify a brand name or catalog number of a manufacturer to clarify an otherwise incomplete specification, there was, for instance, or equivalent shall be added after such a reference to permit the acceptance of offers of goods that have similar characteristics and performance at least substantially equivalent to those being specified. So after that, issue the request for quotation to the agreed suppliers. As you see attached in the templates, when we get to that point, we shall look at them at close range. Avoid also stringent delivery schedules, which may attract higher prices. In the use of requests for quotation selection methods, the best practice is to allow 1 to 2 weeks for the supply of off-the-shelf standard goods, or longer period for others, and should include quotation submission deadline, delivery period, payment terms, fixed price validity period, conformity with specification clause. In fact, essentially here what we're saying is there should be enough time frame not to box or appear to box the procuring entity to a corner in overall leading to price hike by the suppliers. So next is receive quotations in a designated sealed bid box and have all suppliers submitting quotations sign a register for the receipt of their quotations. I guess that is self-explanatory. Also, all quotations received before the quotation submission deadline shall be looked into. It shall be locked up in a safe and not tampered with. They shall be opened by the evaluation committee immediately after the bid submission deadline, meaning that there should be no insider dealing or situations appearing to favor one supplier, vendor, or contractor over and above all others. So all late bids shall be rejected and returned to the bidder or supplier unopened, just as they came. They should be returned that way because they have no more use to the PE. Now, quotation evaluation report is the next issue. Evaluation shall be conducted based on the evaluation criteria in the issued request for quotation. All goods offered must meet the minimum technical standards or specifications issued with the request for quotation. There should be no cutting of corners. The committee must ensure that every quotation meets the specification as already put forward. So bidders cannot be disqualified for minor deviations. See bid evaluation PowerPoint for goods, works, and non-consultancy services. Bidders can be requested to supply any such missing documents within the specified time frame, failure which they may be disqualified. That's the only condition upon which they may be disqualified, not on the basis of minor issues that can be corrected within a reasonable frame of time. So a copy of such communication and evidence of its transmission shall be placed on the procurement file. The report should, at the minimum, include the attached tables 1, I will come up with the tables 1 through table 4. Evaluation reports must be signed by all members of the evaluation committee and transmitted to the appropriate approving authorities. Where classifications are requested by the approving authority, the evaluation committee shall meet as a group to respond to such classifications, and transmit the report to the same appropriate approving authority. So, no forms of communication shall be entertained with firms whose quotations are being evaluated unless when authorized by the evaluation committee, and such communication shall be in writing. The work of the evaluation committee shall be classified until their report has been made public by the approving authority. Of course, we all know that any attempt to expose the content or the evaluation issued before the right time is tantamount to favoring some group of people over and above all others, and such situations should be avoided. Simultaneously, notify successful and unsuccessful bidders of intention to award. So I know this one needs to be emphasized. So bids that are successful, the bidders must be notified, just like those who were not that lucky. They should also be notified. Contracts shall be signed for all procurements. That is for successful bids. The contract shall appropriately spell out the terms and conditions of contracts and assign risks based on the party best suited to manage them. Inspection of goods shall be by the user department. Of course, remember the user departments also originate the request by themselves. The contracts are, okay. The contract shall appropriately spelled, I think we have done that. Inspection of goods shall be carried out by the user departments, or in the case of specified acquisition of special goods such as ICT equipment and motor vehicles, by the relevant technical specialists in the agency. For example, the assistance of Ministry of Works or government vehicle inspection officials shall be sought for the inspection of motor vehicles or motor cycles. An inspection certificate shall be issued by the party inspecting the goods. That is after they are satisfied that those goods have met the technical specifications as already established before their supply or the award of the contract. All goods shall be inspected against the technical specifications issued with the request for quotation. Of course, remember at the point of issuing request for quotation, it carries with it the criteria as well as the specifications of the items to be procured. Any deviations from such must be rejected. Therefore, at the point of supply, the inspecting team must ensure that technical specifications have been met. Store receipt. A store receipt shall be issued for goods, for all goods other than motor vehicles. The storekeeper shall keep records of employees issued stores, and such records shall be kept on the procurement file. Complaints from suppliers, because oftentimes suppliers can also come up with some complaints, maybe resulting from variations and the like. So resolution of such complaints received from suppliers should follow the procedure outlined in the procurement procedures manual. Payment documents. Payment documents shall be made based only on approved invoice, supported by a delivery note, a store receipt, an inspection report, and copy of the contract ab initio entered into with the supplier, and in accordance with the terms and conditions of the contract. So copies of payment details shall be kept on the procurement file as well. Assets shall be entered in the asset register prior to their issuance from the store. Of course, it is the store department that first receives it. So, regarding small works also, it is expected that they should be entered into agreed small works in the procurement plan. The timescale specified in the procurement plan should align with the specified inputs required for the achievement of the business objectives. Also, services to be procured should be based on collective decision of the team and should be based on business need, just like the case with provision of procurement of goods. Hello, class.
Hello, sir.
Hello, class. Can you hear me? Have I lost you?
No, sir, we are here.
Okay. If you have comments, please put them forward, or questions, whatever. Let us give 2 minutes to address them. Okay. In the absence of, it appears I'm glad that we are all moving together. So, services to be procured should be based on collective decisions, of course. We must also conduct market survey.
Question.
Okay, please.
In the case of request for quotation, the procuring entity have a particular company that they can always reach out anytime they have a need for either procurement of goods or services?
Just a second, please. Hello.
Hello.
Yeah, please come again with your question. I'm sorry about that.
So I said, in the case of request for quotation,
yes,
is it abnormal that a procuring entity, have a particular company or supplier that whenever they have a need for a procurement of either services or goods, owing to the fact that it's a small unit of need, is it proper that if a procuring entity have a particular company, they can always reach out when they have a need for such need, rather than going through the normal process of creating a competitive environment for, let's say, 3 companies to come and bid for whatever needs the procuring entity have?
Gossin, I'm glad you mentioned other than the competitive. Once you want to visualize the aspect of the entire procurement exercise being competitive, it's like dead on arrival. Remember, this is for public interest. And there must be this competition. Yes, granted, when we were trying to introduce this lecture this afternoon, we did say that there has to be a register, right? A register of potential suppliers, contractors, consultants, or there's a lead to such register or to such people, category of people. But limiting it to a particular individual or individual supplier, contractor, or consultant is very, very wrong. It wouldn't give you, at the end of the day, effective and efficient public procurement. procurement should become highly competitive, such that at the end of the day, it is seen that the best is supplier, the best vendor, the best consultant or contractor is what is engaged. So, and then it is also on that basis that we should conclude that the best materials for the job we have actually procured are the cheapest value for money. That is at the cheapest, meaning that is the value for money has been maximized. So very wrong. That is the overall response I can tell you. It is very wrong. It's no longer competitive.
All right, sir. Thank you, sir.
Yeah. You're welcome.
Can I ask for more further clarification on that? Because, sorry, my name is Victor Iwola.
Victor, go ahead. I can see your name.
Okay, sir. So, in one of the discussions I've worked, how we need to do it there is we had a pool of vendors. Okay, so let's say for a particular item, we have about 4 or 5 people who are used to supplying it to us. So in such a situation, if we throw it open to these 4 people, and then out of them we narrow it down to 1 and select, I mean, after going through the same competitive process, but instead of throwing it out now generally to the public, we are limiting it to these 4 vendors that are already in our pool of vendors. Is that approved? Is that okay?
That is marginally better than the last one. But overall, a competitive bidding expects that you should throw it open and let the best come emerge at the end of the day.
Okay, thank you very much. Thank you, sir.
You're welcome. So having said that, I hope we can continue now.
Yes, sir, we can.
So after conducting the market survey in order to, 1, determine whether those products or items are available, and then determine the price range within which we could get them procured. The next thing will be to establish a small procurement committee to oversee the procurements and serve as evaluation committee. You know, when a vendor eventually emerges, or the supplier or the consultant, by whatever name, depending on what is being procured, at the end of the day, what such person is procuring will have to be evaluated to see whether it actually met all the specifications as given to it under the awards. Is that taken? So the committee should not include the project auditor to avoid possible conflict of interest, of course. That one is also self-explanatory. Then prepare technical specifications, drawings, and BOQ, or list of items in the case of lump sum contracts. Methodically select at least 3 reputable contractors from the entity's database of service providers. And this is coming close to what you had in mind. Then prepare requests for quotation. We should include quotation submission deadline, the expected delivery period and payment terms, fixed price validity periods, conformity with technical specification. Let me ask class what a particular question arising from this. Why must there be validity period, price validity period? Hello, class. Can you hear me?
We can hear you, sir.
Yes, my question is, why must the request for quotation contain price validity periods? Why must there be that clause? Yes, go ahead, please. Make an attempt.
That could be because there is possibility of price change over a given time. And if it does not come, And if it does not contain it and there is price change, then it puts the buyer and the seller loggerheads. It becomes a problem.
Beautiful. I think you just got it. You know, especially within our climate here, that prices often change due to inflationary trends and pressures, is it not? If you do not have a validity price period, it means that especially the contractor, you know, this is a contract, or the supplier, once it has been awarded, it means that both parties had agreed that the contract should be, or the procurement should be carried out in that manner as specified and endorsed by both parties. So should the vendor now fail after the entering into contract, especially with the absence of price validity period, don't you know it spells so much doom for the provider, the vendor or supplier? So this is also to help and protect him. Hello? Do you understand what you're saying? Yes, because that particular clause is also with the intention of helping to protect him. Should such situations arise where there could be price inflations and pressures. So issue ROFQ, including technical specifications, drawings, and BOQ, or list of items to the selected contractors. Also receive quotations. The procurement committee should evaluate the quotations and prepare an evaluation report in line with all these criteria aforementioned. The report should, at the minimum, include the attached. Don't worry about this. We have these tables at the end of I don't want us to move back and forth. We'll look at the tables at the end. Then submit evaluation to the approving authority for approval. Simultaneously notify successful and unsuccessful bidders of intention to award them and to deny them, as the case may be. Prepare and sign contract agreements. During contract management, ensure that works are delivered within agreed period and according to the specified quantity. Technically proficient staff only should inspect the quality of the output. You know what we mean by that. If it's an engineering related works, it should be engineers in that particular area that should handle that. If it's work pertaining to a medical field, it should be people in the medical area and so on and so forth. Payment should be made in accordance with terms and conditions of the contract. So I think we have to look at the third segment of our procurement of low-valued, commonly used items in terms of consultants and consultancy. Hello, class.
Yes, sir.
Hello, sir.
With you, sir. Okay. If you have questions, let us have them before we go into that, especially pertaining to the procurement under works or works procurement. We should move on. Hello, class. Am I alone?
You are not alone,
No, sir, we are with you.
Okay.
We are with you, sir.
Glad to hear that. So this time around, we are looking at consultants qualifications selection. That is CQS. In this aspect, we are dealing with firms of consultants. Initiation and shortlisting should comprise of technical assistance required to support project implementation. Should be collectively agreed, just like in the cases of goods and works. entered into the work plan and procurement plan respectively and submitted to the bank for review and clearance. Which bank are we referring to here? Hello,
World
class.
World Bank, sir.
Not necessarily World Bank.
This, in our case, it's going to be the the Bureau of Public Procurement.
Okay.
For small
They can stand in that gap. That's one. Then if we are referring to the procuring entity, we will now be looking at the procurement department and its staff. We're also looking at the database of the procuring entity. So all these are part of it. So establish a selection committee of at least 3, but not more than 5 members. That is what is expected under consultants qualification selection. Prepare draft terms of reference, including the budget estimate in terms of persons days, days in weeks, could be weeks, months, and as the case may be, assigned duration, then evaluation criteria, and submit the draft terms of reference to the approving authority for clearance. Just 1 second. Let me call you back. Let me call you back. I'm delivering a lecture. So, under limited competition, a minimum of 3 firms should be invited to express interest. Limited competition is used only where there is availability of qualified firms. Otherwise, leave it open, throw it open to as many firms as will be possible. Under open competition, a request for expression of interest should be published on a national daily and the agency's website. This request for expression of interest can also be transmitted electronically to well-known and qualified firms and relevant trade groups and professional associations. Someone is disturbing us. Could you mute yourself? Then Febo, you are disturbing us, please. So 2 weeks should be allowed for firms to express their interest. A report should be prepared by the evaluation committee and should include individuals. Then select the top ranking firms with the best qualifications and references. On that basis, prepare the request for proposal. Send such request for proposal to only the selected highest ranking firm to submit their technical and financial proposals for assignments in accordance with terms of reference as specified. Then review the proposals and prepare for negotiations. Selection committee negotiates the contracts with the firm and prepares minutes of negotiation. Sign the contracts or signing of the contract follows next. Keep the process confidential until contract signature. Publish contract award information, that is the name of the selected firm, in a national newspaper or in an appropriate website as provided in the public procurement consultancy services regulations, and keep all documents on the file. These are the basic issues. Then prepare draft terms of reference, including the budget estimates in terms of the person or persons involved, the days, weeks, that is time duration, as the case may be, and then evaluation criteria. Invite CVs for a minimum of 3 qualified individuals who have comparable general and specific qualifications. Attach the TOR to the CVs for CVs, to the call for CVs. Where no qualified consultants are identified, publish an expression of interest in a national daily as well as in the agency's website. Also, prepare a report on the comparison of CVs and rank the candidates according to how they satisfy the evaluation criteria pre-disclosed in the terms of reference. Then negotiate contracts with the most qualified candidate. Sign the contract. Supervision follows on the performance of the consultant, and ensure that payments are made against agreed deliverables or outputs. Applicable cases. In terms of a direct selection, the direct contracting procedure can be used in the following cases. A, in a situation where there is an existing contract for goods or works. B, in a situation where there is a justifiable requirement to re-engage a firm that has previously completed the contract within the last 12 months with the procuring entity to perform similar type of contracts, on the understanding that the previous contract was completely satisfactory. No advantage will be obtained by competition, and the prices for the direct contracting are reasonable. These are the conditions. C, the procurement is of both low value and low risk. D, in response to emergencies, in situations where emergencies arise and they need to be, seen to immediately tidied up. Standardization or compatibility with existing goods. Existing goods in the sense that such firm or such consultant services must have been rendered by the same firm, and you wouldn't want deviations or differences between what you already have on ground and what you presently need. F, the required equipment is proprietary and obtainable only from one source. G, goods, works, and consulting services in the borrower's country by an SOE, university, research center, or institution are of a unique nature. So all these are the conditions under which you can have a direct selection. Then what are the procedures required? Prepare estimated cost of goods or works to be procured directly from a single source. Prepare also justification for direct contracting. Submit estimated costs and justification to the Bureau of Public Procurement. Prepare technical specifications and contract conditions. Send contract conditions to the supplier. Ensure prices being charged are reasonable and at least the same as the supplier charges to the other customers. Upon all this, then the contract can be entered into by signing it. Hello, class.
Hello, sir.
Prof.
Hello, sir, we're with you.
Okay, your reactions.
So I have a question, please.
Please go ahead.
Okay, so as regards the selection of individual consultants for the expression of interest, please, I need you to throw more light on point B, It said invite CVs from a minimum of 3 qualified individuals who have comparable general and specific qualifications. Attach the TOR to the call for CVs. Where no qualified consultants are identified, published an expression of interest in the national daily as well as in the agency's website. So I just want to clarify, do you need to do this in place of publishing in national daily, or you do the national daily where you don't get anyone, you now do the selective tendering? Because this option is like saying selective tendering is the first option. Is where you don't get what you want through selective tendering, then you can now advertise.
I note your question very well. Remember that whether it's under consultancy or works or goods procurement, we started this lecture by trying to agree that there is need for a register.
Yes.
Good. Register of what or who? What is the content of the register?
Goods, work, or services.
Hello? Hello?
Sorry, you register for consultants?
Yes, whether it is consultant, in this instance, since we are talking consultants or consultancy, it should be a register of containing names of consultants that have been having business transactions or dealings with your PE, is it not?
Yes. So where is a new PE that is doing this for the first time, and you don't have that kind of, you have not done any open advertisement to have a registrar, it's a new PE, and
If it's a new PE, you can see it just didn't stop there. When he said, when the first one is invite CVs from a minimum of what? Three qualified individuals who have comparable general and specific qualifications. This particular clause, the first sentence there that we just read, means that your PE must have been in existence beyond this particular period you're talking about, isn't it?
Yes.
Before you can have a register containing CVs, it means that you must have been dealing or having consultancy relationships with those people or those three who appear to have the same qualifications. True or false?
True. Yes.
Good. In the situation where that one fails, the thing goes ahead to advance some more openings for you to stay operate. You can also go ahead to publish an expression of interest in national daily, meaning that you're inviting people to now react to your or respond to your demands, is it not?
Yes. Okay, so just to be clear again, because if you're sending to 3 individuals, you're attaching the TOR. So are you also attaching the TOR if you're publishing in national dailies?
Of course, the terms of reference for them to even begin to evaluate themselves, whether they qualify to make an attempt or not, will be on the basis of what the TOR says, that this and this and this are what you really, the nature of the consultancy you want to be done for you as a PE. That's what, it must be part of it. It must be in the national interest or the website.
Okay.
Is that taken?
Yeah, taking, because I was thinking you first of all call for the CVs before you give them the SBD to send in their TOR.
No, the issue of CV only comes into play in a situation where you as a PE must have been in existence beyond that particular period you're talking about. Meaning that you have already started gathering or updating your databases on possible suppliers, possible consultants in this particular issue we're talking about. Is that taken?
Thank you very much, sir.
Yeah. So we are trying to now look at sample procurement documents. Yes. Quotation solicitation letter, clauses 1 to 7. right? And the clauses 1 to 7, as you see them there on the screen. Juliet, are you responding to us?
Sir, with you?
Are you responding to us?
No, sir.
Okay. So we are saying the quotations, sorry, the quotations solicitation letter, the first page you can see what we have there, clauses 1 to 7 as specified. The entire exercise is meant to take into cognizance clauses 1 to 7, as we may see, as far as for the entity intends to procure, that is the items here. There should be follow-up with the invites, sealed bids from eligible firms for the supplier as described in Annex 1, that is take on Annex 1, contains technical specifications down to clause 7 that deals with goods delivered, which should be inspected against contract substandard good, except the that is against contract specifications. Then eliminating substandard goods. Then you have other ones from 9 down to 21, as you can see them there. Goods shall be delivered within 30 days from the date of signing the contract, together with the supplier's invoice showing description, quantity, unit price, total amount, plus detailed operations and maintenance manuals. Suppliers shall warrant that goods are new and unused. You must give that assurance. 12 years warranty is also required, down to acknowledging receipt and indicating your firm's interest by submitting quotations. So we have those tables we were talking about on technical evaluation form. There should be the column that describes the items, bid validity, delivery period, other accessories, responsiveness, then technical specification in the issued RFQ, supplier A specifications as offered by supplier A against what supplier B offered and against what supplier C is offering. There's also, of course, this is an extension of that. Responsive quotation, those ones that are responsive, or quotations are responsive. Then there's also side by side, the ones that are, remember, we did say that you must inform those whose quotations are to be considered and those whose quotations are not considered. So non-responsive suppliers as against responsive suppliers must be notified. Then there must be basis for comparing the prices. The price that supplier A is offering. Please, you can do a lot by helping us.
So we see. Madam. Okay.
You can do a lot to help us.
No payment. No, just like.
Please, you can help us. You can help us by minimizing the noise. That's subtraction. So the third table there is mainly for you to compare the prices of the best grade that you have in order to know who will emerge eventually on the basis of financial aspects. Now, recommendation for contract award. This is how it should be or prepared, a sample of how it should be prepared. And then it must be duly signed by all the members of the committee. It's, as you can see at the tail end of this particular table. So on this note, we'll end today's lecture. If you have questions, raise them so that we can attend to them before we finally call it a day for today.
Excuse me, sir.
Yeah, sure.
Good afternoon, sir.
You're welcome.
I just wanted to take us back a little, please.
Okay.
The other participant that asked about advertisements.
Yeah.
If I'm not mistaken, sir, I think the advertisement, when you're looking for individual consultants, it is an expression and interest that goes out to the newspaper, where you state you're looking for an individual consultant with XYZ qualifications. Then it is after you have those and you have done your evaluation. So the next step of the people that have been evaluated are the ones that will be issued with the RFP.
Okay.
So, because I remember hearing her saying that, is it the terms of reference that will be advertised in the newspaper? I just wanted to bring that up.
Okay, some responses before I can say something on that. Klaus, I want you to respond to what our friend is saying. Hello, Klaus. Let's make this class a little more interactive this time. The lecture is over. Let us try to contribute, given our various experiences.
But can she come again, please? I didn't get her. I didn't hear her well.
Okay, could you come again, please? Could you repeat your question so that class can participate?
Okay, sir.
And
No,
please
sir,
be
I
allowed.
had
Be loud.
one
Loud.
of the, sorry?
Go on.
Hello, sir. Okay.
Go on. You have the floor,
One
please.
of the,
Be loud.
thank you,
Loud.
sir.
Louder. Louder.
Okay, sir. One of the participants did ask a question about when you're looking for an individual consultant, what should go on in the publication. In a case where maybe you're new, your procurement entity is new, and you do not have a database of consultants that you can pick and request for the CV. She asks, if you are not going to do an advertisement, what is going to be in our advertisement? Are we going to be including our terms of reference to the advertisement? Now, my own experience is that usually when you're doing an advertisement for a consultancy, whether individual or firm, what we send out to the national dailies is the expression of interest. Now, in our expression of interest, it sets out all the criteria for selection, what we are looking for, the qualification, and that the type of consultancy we are looking for, whether it's an individual consultancy or it's a firm. Now, that's what goes out first. Now, when people, and then usually there's a deadline and all of that. And now when bids are submitted, the first evaluation is to evaluate to see those that meet up with the basic first criteria that was stated. Now, for those ones that qualify, we'll now shortlist them and then we'll issue them with the terms of reference. Now, that's going into the second stage of the procurement process for the individual consultants. That's what I just wanted to bring up. So I wanted to have maybe throw more light if there is anything I've said that is not correct.
Well, I wanted to say something. Are you done? You wanted to throw some light? Hello?
Yes.
Yes.
Yeah. To some extent, she's
She's right now at the point where she is able to draw up the list of those that responded to the expression of interest. They sat down and the group, the committee or the PE is able to figure out those that are meeting their basic requirements. From there, we develop that to start asking for their tender, to be able to analyze the tender and do a proper evaluation, second stage of the evaluation.
Yes, she's just not. She's just not right, and she's so wholly right. She's totally right because we are looking at this consultancy selection or individual consultants selection from two perspectives. One, in a situation where the consultants are already known to the PE. In that case, obviously the CVs are already with the procuring entity and they have the trade that will eventually be, that will be invited, have already done some work for the PE in that direction. So for which the PE has their CV in their database, yes. Now, what will follow will be an attachment of the TOR to that. But there is also a second phase in a situation where they are not known at all. They are not even in the database of the procuring entity. So attaching the TOR at that stage, it may not be right. They have first to be evaluated to see whether they are qualified or not. So I think what goes in first is the public expression of interest for them to, key in and see whether they will be invited or not.
Selected.
So
Or whether
upon invitation, yes. So upon that invitation, after passing that phase, they can now be exposed to the aspect of I think she's totally right.
But again, sir, I think there is also a possibility of mixing up the TOR and then the scope. I think at that stage of the adverts, what might be necessary is the scope and not the TOR. Which means the TOR likely comes in when the qualification has been done, and then the shortlisting also concluded. Then you can now expose them to the TOR. That's my own thinking.
Yes, I think we're all on the same page.
It's the same thing because TOR is only telling you how you have to conduct this for me. If you eventually emerge, this is how I expect you to carry out this consultancy for me. Or I mean, if I'm the PE, is that taken? So that is it. So I think you are also right, depending on what pertains to the procuring entity. But overall, there is the aspect of the group of people or individual consultants having a pre-existing business relationship with the PE already before that particular job for which is to be delivered now or needed. And there are also the situation where they are not known at all. If they are not known, there will be no need for it being attached. So that's how we sum it up. So any other areas you want us to talk about? Hello, class.
Go ahead, Prof. Go ahead, sir.
Okay, so we shall also be opening tomorrow with you. I mean, module 7 and provision of low-valued, commonly used goods. But tomorrow will be majorly on assignments and case studies.
Possibly.
Yes.
And some talk about what has happened.
And that one will be handled, that aspect will be handled by my second, Dr. Ikechukwu Eze. He will, I think, Mike, 9:45, right?
Sir.
So that lecture starts by 9:45. So keep to the time, please.
Okay, sir.
Okay, thank you, sir.
Have
Okay,
a
sir.
lovely yeah.
Thank you,
Thank
sir.
you,
You
sir.
too.
Thank you. Bye-bye.
Please, an appeal, sir. An appeal.
Please. Yeah.
The appeal is that we're having network issue around here, and it made us not to catch up. We're appealing that the link to the lecture today and yesterday should be placed on the WhatsApp so that we can go through it today before tomorrow. I think it will aid us to catch up with our LMS
The
lecture.
appeal you are doing now, you have the one that are sent over the weekend.
We have gone
checked
through those ones. We have gone
You
through
have
those
gone through
ones.
those ones. Today you get the one for Monday and today's own. It takes time to convert. You need
All
a
right.
good internet to do that.
All
So
right, sir.
now, can somebody give us a thanks offering for the lecture? Then also say the prayer. A Muslim or a Christian brother.
Yeah, go ahead, Justin.
Sir, yesterday someone sent a link to track D for this procurement.
That one is from our research officer. That's Rex. So that link, if you know that you have done close to 5 or more than 5 models before joining this one, fill it. But for now, can we do the needful now and close? Those who have not written their name should,
Okay.
the way we are not supposed to write it, so that we close for today. 9:45 we start. So who is giving the vote of thanks?
Okay, so my name is Francis Ndimko from Federal Polytechnic, Naked, Owerri. And I want to use this opportunity to thank the lecturers for today, from Ms. Okudo down to Dr. I think that should be Dr. Okudo, right? Down
Professor
to yourself,
Okudo, Dr. Anya, and Professor Akudo.
Pardon me, Professor Okudo. Want to express our sincere appreciation to all of you for your time, your resilience, for tolerating our excesses, especially most times when suddenly our mics are on and the class turns rowdy. On behalf of all of us, the students, we want to thank you for making our time to share to us from the wealth of your knowledge. And we do hope that at the end of the day, we will would benefit immensely from this and also go out there and serve humanity with what we have learned. Thank you so very much.
You are welcome. Thanks so much. So can a Muslim brother or a Christian brother or sister give us a closing prayer?
We're in prayers.
Okay.
Father in heaven, with great joy, we want to appreciate you for yet another opportunity granted unto us from 9:45 to this time. I want to thank you for the lives of our facilitators, the center, even all the organizers of this program, and even with the participants. We pray that all we have been taught, at the end of the day, we'll put all into use for the growth and development of our country, procurement-wise. Even as we look forward to continue tomorrow, we pray that we all live to see tomorrow and continue together. For in Jesus' mighty name we are prayed.
Amen.
Amen.
So thank you so much for today. So we take a few minutes to fill the attendance for those who have not done before I shut down for today. Remember, 9:45 a.m. we start for tomorrow. Thank you so much.
Bye-bye.
Thank you, sir. Thank you so very much.
Bye-bye.
Bye.
Thank you very much, sir.
Thank you, sir.